सुबोध सर नहीं आए क्या?
So 2 more minutes. No, in the section of one varadu. Sorry,
class
எங்க போய் எடுக்கற?
सर नमस्कार।
नमस्कार धर्म सिंह जी, कैसे हैं आप?
बिल्कुल बढ़िया सर। कैन आई स्टार्ट सर ना?
Yeah, please. It's 4 o'clock, please.
Okay sir. Sir, welcome to all our member at Dash at our Series 4 CPL, and today our 3 deliberation with us. First, bulletproof valuation report. ये सीए गोपाल किशन राजू जी चेन्नई से हैं, तो ये हमारा ये टॉपिक लेंगे। सेकंड टॉपिक है IndAS ओवरव्यू, जो हमारे साथ सीए म्यूर चौकसी जी मुंबई से जुड़ेंगे, तो वो राइट 5 o'clock हमारे साथ जुड़ जाएंगे। और थर्ड टॉपिक जो हमारा है वो है रीसेंट अमेंडमेंट इन IBC, इंसॉल्वेंसी बैंक्रप्सी कोड में है, जो कि हमारे एक्स प्रेसिडेंट रिस्पेक्टेड सीए सुबोध कुमार अग्रवाल जी लेंगे। तो इसके साथ हमारे डैश पे सर हमारे साथ हैं आवर गेस्ट स्पीकर्स रिस्पेक्टेड सीए गोपाल किशन राजू जी, रिस्पेक्टेड सीए PK सिंगल जी, रिस्पेक्टेड सीए हिमांशु जी, एंड रिस्पेक्टेड सीए नवीन जिंगर, डिप्टी कन्वीनर ऑफ Series 4 CP स्टडी सर्कल। Convener of Series 4 CP study circle will be joined nearby 6 o'clock because he is now been one of his busy with assignment. Now I request to CA Naveen Ginger. Naveen. And now I request to CA Naveen Ginger. Please welcome to our today speakers, respected CA Gopal Kishan Raju, and address to our Series 4 CP study circle members.
Good evening, sir. Good evening, all of you.
I, Naveen Jinga, welcome on behalf of CP Study Circle for the today's discussion. I welcome CA Gopal Krishna Rajuji and CA Mayur Chokseji, CA Subodh Kumar Agarwalji, former president of ICI. And on behalf of Study Circle, I welcome you all for the today's discussion. I guess today's discussion will be beneficial for all the participants who have joined us for this program. And I hope we will have a very good session and very interactive session. We will start.
Thank you, Naveen. Now I request to CA Aman Shah. Please, if you have a profile of CA Gopal Kishan Raju, please brief it.
Thank you, Dharamji, and welcome you all for the Shri Fort CPC Study Circle. Today we are our guest speaker. He is a versatile speaker. He addressed more than 400 plus meetings on the GST to the various forms, including professional bodies, Chamber of Commerce, industry, and trade associations in both English and Tamil. He is a chartered accountant. He is a practicing chartered accountant, insolvency professional, and a registered valuer. Dr. Gopal Krishnan Raju, a tax, insurance, and the restructuring partner of MS Gopal Rao and Company. Gopal Krishnan Raju hails from a family of chartered accountants. His father, mother, younger brother, and the family all are the practicing chartered accountants. Gopal Krishnan Raju has recently awarded an honorary doctorate in governance of GST in the government sector by Mother Teresa University, Melbourne, Australia. Gopal Krishnan Raju is an independent director, data bank, and have qualified with a distinction in the online proficiency self-assessment test conducted by the Indian Institute of Corporate Affairs. Other than chartered accountant qualification, he obtained many more qualifications. Some of them are qualified valuation examination of insolvency professionals, qualified limited insolvency examination, associate member of Cost Accountants of India. He also an associate member of the ICSI, postgraduate diploma holder in operational research, holds 8 NSC certification in the financial markets, which includes derivatives, security markets, commodity market. Apart from them, Gopal Krishnan Raju has also authored the 2 books. First is Standard Costing and Variance Analysis for professional students. Second, First Lesson in Information Technology for CA students, with 2 editions by Snow White Publishers, Mumbai. He is a seasoned speaker on the information technology, finance, taxation, and a visiting guest faculty for the various institutions, corporates, and the business schools. He is a nominated member of Valuation Standard Board, Academic Board, Department of Commerce, Academic Counselor Member, DG Vaishnava College, Chennai, Academic Board, SIVT College, Chennai, Board of Studies, Guru Nanak College, and many other institutions. He is a passionate writer on technology and taxation. So I welcome you, sir, on behalf of Shri Fort CPC Study Circle, ICAI.
Thank you, Aman sir. Now, mic in your hand, sir. Respected CA Gopal Kishan Rajuji, deliberate something about bulletproof valuation report. Sir, bulletproof valuation report, how to prepare. So we will also learn today from you, sir. Please, sir. Mic in your hand, sir, now.
Thank you very much. The coordinator of Siri Fort CP Study Circle, CA Dharam Singh Ji. Convener CA Arun Kumar will be meeting him by 6 p.m. Deputy Convener CA Naveen Jinga. Thanks to CA Aman Shah for the nice introduction. And my other co-speakers, very senior members, respected past President CA Subodh Kumar Agarwalji, who will be dealing with the latest amendment on Insolvency Bankruptcy Code. We have got Amendment Ordinance 2020 this month, which is a very, very important changes that has been brought out. You have rightly identified the very great personality to deliberate on this particular topic. And another very senior professional is CA Mayur Chokseji. who will be deliberating on the overview of Indian accounting standards. So amongst these two great professionals, it's a privilege for me to share my thoughts on valuation report. And all the three topics are interrelated topics. The present time, especially Insolvency Bankruptcy Code 2016, is directly connected with the valuation. And also Indian accounting standards in very many places. The valuation aspect has been covered, especially intangible assets, India is 38, impairment, India is 36, business combinations, India is 103, and fair value measurement 113, and also 103 for business combinations, and financial instruments 109. Everywhere you have the impact of valuation. So today's topic is actually an intertwined, and rightly Dharam Singh has given this topic to me to share my thoughts rightly on what will be the bulletproof valuation report. So let me now share my screen now, and let me start it aptly by taking you to the important pointers. The first point which I want to share with all of you is, in the recent draft valuers bill, I repeat guys, in the recent draft valuers bill, you have a note with respect to how a valuation report will be prepared, how a valuation report will be prepared, and what are the process of valuation. They have identified rightly 4 processes. We look at it. You have the pre-valuation process, which is the negotiation part. Second is the investigation and the compliance part, getting the data and all. The third is the interpretation or summing up the data handling and the interpretation. The fourth aspect is the post-valuation process. That's the reporting. So that is the process which now we are going to zoom in and find out what are all the best practices. So the first point is I started with the Valuers Bill, which anytime will become a Valuers Act. Now I want to, next I want to start with my point on what is meant by evaluation report. And fortunately, there is only one place where I'm able to find a sublime definition of valuation report, and that is in CBV Practice Standard 110. CBV is Canadian Business Valuators. Canadian Business Valuators, they have a valuation standard. In that 110, there is a definition for valuation report. I will be referring to minimum 2 valuation standards, and I'll be picking up the best practices from these standards, and I want to present it before you. And at the end of my presentation, I'll list out, as a bullet point, I'll list it out what will be the contents, what should be the contents in a valuation report. Now, this is the definition with respect to valuation report. It's actually a written communication containing a conclusion as to the value of shares, assets, or an interest in the business prepared by a valuator. In Canada, they are called as valuator. In India, they are called as valuer. So they are called as valuators there, acting independently. And rightly, they are the first Canadian Institute of Business Valuators. They are the first to actually bring out the 3 types of valuation report. I repeat, 3 types of valuation report. One is the comprehensive valuation report. Second is the estimate valuation report. The third is called the calculation valuation report. And calculation valuation report will be the, in fees wise, it will be only 1/3. And maybe comprehensive valuation report, you have to charge 3x times for what a calculation valuation report is. And I will be deliberating on these 3 a little later. So I want to just start with that it is a written communication. A report has to be written. It cannot be oral. So that is the meaning from this. And containing a conclusion. See, please be very clear about these 2 words. Now, what these 2 says, I cannot give a valuation report which can be oral. Number 1. Number 2, a report should be conclusive, meaning it is not an audit report. Generally, an audit report, without a conclusion, you can give disclaimer. Disclaimer, you are not concluding, but there is also a view that disclaimer is also a conclusion. But ultimately, when you read a disclaimer report, there is nothing the auditor actually concludes. So he is unable to actually comment. So evaluation report cannot be a disclaimer. This is a point which we need to understand. And this point has been taken, and in the draft valuers bill, they have rightly identified this point in the bill itself. So which when it becomes an act, we'll have a very clear clarity, statutory clarity, that evaluation report cannot give disclaimer. No, I have not been given data. No, I have not verified the numbers. So I cannot take responsibility. ये नहीं बात है, इसका बात, this is not an audit report. ये बात नहीं है. Please be very clear about these two things in valuation report. Now I'll be referring to two standards. One is the ICA RVO valuation standard, the Institute of Chartered Accountants of India Registered Valuers Organization. ICA RVO valuation standards. In that you have standard number 202, which speaks about reporting and documentation, and IBS, International Valuation Standards 103, which speaks about reporting. So these are the two standards I'll be referring to, and I'll take the best practices from this. So what are the prescriptions and what practices we can take, and then I will assimilate it and I will present it before you. देखेंगे ये तो IBS 103 है. So it has only 14 paragraphs, and I'll take only few of the main pointers from this. And especially, I want to make the first point that there is a purpose for a valuation report. Without a purpose, please look at this paragraph. The report must set out a clear and accurate description of the scope, purpose. Purpose is actually the intended use, and also the disclosure of assumptions and special assumptions. I'll speak about the assumptions and special assumptions, and we have a separate standard which speaks about those assumptions and special assumptions. If you look at the IVS, you have the basis of value, the approaches and the methods. In IVS 104 and basis of value, there they are coming out with the point called the assumptions and the special assumptions. What is that? I'll tell you. And they are making it very clear that these are must. That is why I have kept it in red color. Please note down that, guys. These are must. This is a prescription and as per a standard. So that means you must mention the purpose of evaluation report. For example, for financial reporting purpose, for IndAS purpose, for tax reporting purpose, for bankruptcy purpose, for insolvency purpose, for the purpose of lending or borrowing. For example, a banker will lend. So the company will actually take an action to borrow from a consortium of lenders. So at that time, there will be a need for doing the valuation. So therefore, that is very important. So the report must set out a clear and accurate description. Purpose, very important. Disclosure of assumptions, significant uncertainty on limiting conditions that directly affect the valuation. That's very important. So that's why I mentioned IBS 104 speaks about assumptions and special assumptions. And also uncertainty that limit the conditions. Of course, if uncertainty is there, you have to go for an alternative. You can't give a disclaimer. So that's very important. As chartered accountants, we have been tuned. Okay, nahi to hai, wo information nahi hai, cooperate nahi karte, wo disclaimer de denge, oh nahi hai. This is not an audit report. The valuation report is quite different. Okay, good. Now let's go for the various types of reports. But anyhow, this standard is only giving about the comprehensive and abbreviated summary report. And this is same even in the valuers bill also it has been mentioned. And please look at this. The para number 10.3 of the International Valuation Standard also prescribes there are may range. Please look at this word, may range. That doesn't mean that there are only two types. That is why Canadian business valuators, I have mentioned 3 types. So they also are not giving a 100% list that these are the types of valuation report. It only say may, that means comprehensive narrative report, comprehensive report, abbreviated report. And please look at this. The same is also given in the draft valuers bill recommendation in para number 29 of Committee of Experts report. They also say there are two types of report should be prepared. One is summarized, and that is what even IBS speaks about. It's called abbreviated. Here it is summarized. And detailed valuation report, and that is called comprehensive narrative report. So our IBS as well as our Indian valuers draft bill. So both are now in sync with each other. Of course, Canadian business valuators, they go one more step and they are identified three. I'll discuss that also. So this is what the three valuation types of report. I have already discussed about comprehensive. So the second one is the estimate valuation report, and the third one is the calculation valuation report. In comprehensive, the review will be comprehensive. And in estimate, there is only limited review, like how we do a limited review audit for a listed company. And for a calculation report, no review or minimal review. No review or minimal review. And remember, guys, I want to just make one point very clear. That with respect to calculation, there are a lot of avenues that are possible, which maybe the insolvency professionals and valuation professionals across the country, they should properly represent through the insolvency professional agencies and RVOs, registered valuer organization, stating that the need for a calculation report, especially in insolvency bankruptcy code, there is a need to actually identify the claim. The claim has to be determined. I repeat the word, the claim has to be determined within 7 days from the date the claim is actually being made. So there is a time limit actually to do it. And if the number of claim forms runs in hundreds, thousands, that is the time when we need to take the help of professionals. So there, even though ultimately it will be the statutorily determination has to be done by the insolvency professional, the verification of the documents, calculation done with respect to the arithmetic part, the scope can be restricted only to the numerical part, not the substantive part. Okay, so the substantive part can be actually verified by the insolvency professional. That is his responsibility. He can't delegate it. But the calculation part, which will actually take time, can be delegated. And these are the places where the IVO, the RVOs, and the IPAs have to actually properly escalate through the very senior professionals in our profession, and they have to throw open this part as a professional opportunity. And a lot of scope is there with respect to calculation report. Good. Now, these are all some pointers to give you the comparison between the comprehensive, estimate, and calculation report. Now, I will now take you to the most interesting part. Good. And that is the valuation report part. Now, I want to make one more part very clear, that valuation report includes one very, very interesting aspect, and that is called as peer review. And when there is a possibility of a peer review for a chartered accountant, for a chartered accountant firm, for an individual CA, practicing CA, or for a firm of practitioners, or there is now a mandate to have a peer review process mandatory for those who are auditing the listed entities, why not a peer review process for evaluation? And remember, the peer reviewer who reviews the valuation report of a valuer has to give a report, and he has to conclude, yes, there are minus points, there are plus points. No, there are no minus points, only plus points. Everything is paka. No, plus point is very poor, only 1 or 2, minus point is more. So that means he has to conclude. So the independence for peer reviewer, the report should also be sufficient. That is why the standard is actually comprehensive of all types of reports. So inclusive of peer review report. And ladies and gentlemen, I want to make one very, very important submission here that in the days to come, it is not only the CAs or cost accountants or company secretaries are subject to peer review. It is also the valuers are also will be subject to peer review. And the days are not far off where insolvency professionals also will be subjected to peer review. So that process also will be starting anytime. So the report also should be sufficient for an appropriately experienced valuation professional with no prior involvement with the valuation engagement. Then only the independence will be there with respect to the peer reviewer who is doing the peer review of the valuation report. But you review the report and understand the items in paras. Okay, that's all the reference part. So now I am taking you to the main core aspect. That is with respect to the contents of the valuation report. Now, the contents is given. That is a heading. And the heading I am taking from para 30.1 of International Valuation Standards, the ICA RVO 202 para number 11, and also rule number 83 of the company's registered valuers and valuation rules 2017. And if you look at para number 30.1, it is actually 8 pointers they have given. Only 8. These are the heading. And these 8 are minimum. Please look at the word minimum. Red color I have underlined. Now, the same is the word even ICA RVO 202 says, para number 11. But here, you have A, B, C, D, E, F, G, H, same 8. 9 is valuation methodology, 10 restriction, 11 major factors, 12 conclusion, 13 caveats. There are 13 points. So here it is 8, here it is 13. And your rule number 83 of the company's list of valuation rules 2017, there is sub rule 3 of section rule number 8. There it is 12 points there. And ICA RVO 202 para 11 and rule number 83, the 12 point is same. Same 12 point in rule 3, 83 and para number 11 is same, except the 13th point. And what is the 13th point? The 13th point is your the valuation methodology. The valuation method which you have to adopt is not prescribed in the company's list of valuers and valuation rules. But I want to refer you to para number 30.1, which is International Valuation Standards. There they have mentioned both the approaches of the, whether it is income approach, whether it is cost approach, whether it is market approach, you have to mention the approach. And under that approach, you have various methods. For example, if it is market approach, what is the comparable transaction method or the publicly traded comparable method? That is with respect to the market approach. Whether it is income approach, what are all the methods? So, IBS 30.1 makes it very clear that you have to mention approaches and methods. And ICA RVO 202 mentions methods to be mentioned. So methods comes under approaches. So naturally, when you mention methods, you have to mention the approach also. Maybe if only approaches are given, maybe a method you have to say whether they have not mentioned about it, they have not prescribed about it. So my view is ICA RVO 202 is a much comprehensive, detailed list of headers which must be there, and this is a minimum. Please look at the word. Valuer shall at a minimum include the following in the valuation report. One thing I need to make this up. They're only giving heading. What should be there inside the heading? The English, the content, wordings, grammar, syntax, how it should be? No. That is why in this profession all these years, we always look back and seek the help of the seniors. Senior, can you give me a format of your valuation report? So naturally, and I should not mention the names of the big audit firms here. And such audit firms also, they have some model, some format. And it has been a legacy that these formats have been followed, despite the fact that we don't have a format like an audit report of ICA or an audit report of Institute of Cost Accountants or a secretarial audit report prescribed by the Institute of Company Secretaries of India. Here, there is no prescribed format with respect to valuation report. And the moment you say I will prescribe a format for a valuation report, you have various models. Because you have an asset called land and building, that has to be valued. And remember, guys, this section, this IBS 103 is a standard that is applicable for valuation of land and building, valuation of plant and machinery, valuation of securities or financial assets. For all types of assets, this is applicable. So now, the moment you say that this is the format, that means you should have a format for a land and building valuation. The moment it is a land and building valuation, there is a physical land and building. There is an interest in a land and building. For example, the next 10 years, you are the owner of, you are going to use this building. So, okay, your kya daam hai? Oh, value kya hai? So that means interest in property. The property interest has to be valued. So you have a separate model, and maybe the format of the report will change. So therefore, this heading is not comprehensive. ये तो just 1%, 2% of the entire valuation report ही है. So just 2% of it. ये तो खत्म नहीं हुआ. This is just a शुरुआत है, just a beginning. So what is most important is you need to be a very good storyteller. You need to be very good storyteller, very good in English, very good narrator. You should narrate it very nicely. And those of the accountants who have the flair for writing narration of the journal entries, I'm sure they'll be a very good valuation reporters. So now, with this background, I'm now taking you to a very important point. There is another standard which I want to actually refer, and from by collating all these three, para 30.1, para 11, and rule 8.3, I have brought out the what is called as the bullet points of valuation report. That's the bullet points. So A, B, C, D, E, F, G, H. So here it is 5 plus 3, 8. Then you have 9, 10, 11, 12, 13, 14, 15, 16, 17 points I brought out. 17 points. Oh my God, you mentioned only 13, from where the other 4 came. And this is what the types of calculation, the valuation report being provided. So what is the type? So this is taken from another standard. Please look at, this is the standard that is Canadian Business Valuators, Canadian Institute of Chartered Business Valuators. In that 110, para number 10, the valuation report shall have an introduction that includes the following information. In that A, B, C, D, E, F, G, H, I, J, so they have given 10 points. So 8 points is only given by para 30.1 of IBS 103. But Canadian Business Valuators, they have given 10 pointers. From that, I am taking 3 pointers, which is not there. One is the type of valuation report being provided. So here, it is part of a standard and best practice. So therefore, let that be one of the important aspect in your valuation report, whether it is a comprehensive valuation report or is only an estimate valuation report. No, you have verified every information that has been used in the valuation report. So it's almost like an audit. It's almost like an audit, comprehensive. You have thoroughly verified the inputs, from where the inputs have come. Those inputs you have verified the source of it. It is not taken from clouds. There are some basis for those numbers. Estimate. So limited review only you have done. So not a detailed review. Maybe you have only gone through some of the reference sites which has been referred. It is there. Maybe that 2 days, 3 days it will be there, 4th day it may not be there. So therefore it's only, you have to say, I have only done an estimate, I have only done a limited review, I have not done a comprehensive one. So you have to mention that, very important. My view is this will, if it is mentioned, your valuation report will be a bulletproof valuation report. All this will make it a bulletproof valuation report. Now I'll come for the real, what do you call it as the contents, the format, the inputs of a valuation report. Now, please look at the next point, which again I have taken this from one of the 10 points of the Canadian Business Valuators. Please look at this. A statement that the valuator's compensation is not contingent on an action or event resulting from the use of valuation report. Very important, guys. A statement from the valuator's compensation is not contingent on an action or event resulting from the use of valuation report. Now, what is this? That the fees paid are payable. Normally paid is very rare. So if it is payable, the payable fees will be subject to, will not be subject to, I repeat again, will not be subject to an event resulting in the use of a valuation report. That means success fee. Very simple. Let me put it. No. My valuation report, you will use it. You will go to your investor. Investor, only when he agrees to this valuation and then he invests 80% of this valuation or 70% of it, he will invest. Then my fees he will pay. No, if that is not fruitful, if it is that isn't fructified, then it is not so. Then that is not the way a valuation report should be. Please look at this. A statement that the valuator's compensation, that is fees, is not contingent on an event. That means you are a professional for whatever time and effort that has been put for the preparation of the valuation report. You are or you will be aptly compensated. That's all. And it has nothing to do with the plus and minus, the good and bad, happening or not happening of any event. So that is very important. So that is why if that is connected, the fees is connected to the success event, then that fees is called a success fee. So then such kind of valuation reports doesn't fit to the standard prescription. So what does a standard prescription is? No, you are eligible for that fees and don't connect this fees to the success part of your valuation report. It has nothing to do with the success part. So if it is done, please look at the statement. The values compensation not contingent. You have to give a negative statement. No. I have not connected to any success fee. Whether paid or payable, it is aapas ka mamla hai. It is between you and the client. No, he will pay 1 day, 1 week later, 10 days later, or you will say only if you pay me the fees, I will sign it. On the date of valuation report ka delivery date ka wo date ye check mujhe chahiye. So all those are the stuff is between you and the client. But the statement that the valuator's compensation is not contingent. Wahi to baat hai. Please look at this point, guys. The statement that the valuator's compensation is not contingent or even resulting in the use of the valuation report must be mentioned. They are very clear. This has to be there. And there is one more, the last one. Please look at this. A statement that the valuation report has been prepared in conformity with the valuation standard, which is not there. In these three, it is not there. These three, it is not there. They only speak. These are, even though it is prescribed in para number 30.1 of section 30 of IBS 103, nowhere they speak about that the report should say that the statement that valuation report has been prepared in conformity with valuation standard. Nowhere. Even para 30.1 they don't say. And even para number 11 of ICRVO 202, they don't say that. Which is my view, they have to say, my valuation report conforms to valuation standard. So that is our first point in every audit report. Every audit report we say the auditing standards, the assurance standards has been followed, the respective standards of auditing has been followed. We mentioned that. So it is part of our practice that we need to say, I have followed a prescription. So if that is not there, then which prescription you have followed? So that you have to mention. Are you following ICRVO 202? Are you following Rule 83? So that is never mentioned. So that where somewhere you have to mention that that your audit, your valuation report, the statement that the valuation report has been prepared in conformity with valuation standard. Now you can mention one more. Maybe you can put one more question here. Mr. Raju, can you say valuation standards means कौन सा valuation standards मैं डालूं? वो international valuation standards डालूं या ICRVO valuation standards डालूं? ये तो आपस की मामला है. So and nowhere, even in the company's registered valuers and valuation rules 2017, okay, in 17, rule number 18 and 19, they make it very clear that until a valuation standard which is prescribed or notified by central government, the valuation standard which is internationally accepted or the valuation standard adopted by the respective RVO will be the valuation standard. Now, यही तो बात है. So ICRVO 202, ICRVO, Institute of Chartered Accountants of India, Registered Valuers Organization. This RVO is a Section 8 company. ICA is a statutory body. ICA is statutory body. ICRVO is a Section 8 company. Both are independent. But ICA is the founder. we can say they are founding, the members in ICA RVO are the central council members of the elected central council members of ICA, are those who are holding positions in ICA. So therefore, the point to be noted that ICA is the founder of ICA RVO, and under ICA there was the Valuation Standards Board, and Valuation Standards Board have propounded the valuation standard which is applicable from 1st of July 2018. From 1st of July 2018, and there is the direction that has been, there is a notification that has been brought out by ICA RVO that the ICA RVO has adopted the standard which has been propounded and prescribed by the Institute of Chartered Accountants of India. So therefore, all the members, all the valuer members, all the members who have registered as valuers under ICA RVO and chartered accountants who are issuing valuation report, they have to become, being a chartered accountant, I am a member of ICA, and therefore from 1st of July 2018, the standard prescribed by Institute of Chartered Accountants of India, that standard, and what are those standards, and these are those standards. Please look at this box, guys. The ICA RVO 101, 102, 103, 201, 202, 301, 302, 303. These standards are applicable even for a chartered accountant who gives a valuation report other than the Companies Act, other than the Insolvency Bankruptcy Code, other than the SEBI regulations. Other than this, any valuation report, if it is given by a chartered account, signed by a chartered account, for example, under Income Tax Act, under FEMA, okay, under bank regulations, any valuation, or other than the statutory requirement under Companies Act or under IBC, there is a requirement for valuation by a chartered accountant. That will come under the regulations of, that will come under the standard prescription of ICA Valuation Standards Board prescribed valuation standards. So those who are members of ICA RVO, they have to necessarily follow the ICA RVO valuation standards. And those who are not members of ICA RVO, they have a choice. Maybe they can, but as a chartered accountant, if I sign, then I have to follow. Maybe if I'm a company secretary, I'm a cost accountant, and I'm not a valuer, then the internationally accepted standards I can follow. That is IBS I can follow. And my RVO doesn't adopt any standard. So then the choice is with respect to the respective valuer. Good. Now I'm coming to the next important, very, very next important. We have come to 4:40 now. I have another 20 more minutes. And in this, I will take another 10 minutes to conclude my session. And after that, we'll have another 5 to 10 minutes for question answers. And in that question answers, maybe I'll request Dharam Singh and the entire team, okay, convener, deputy convener, and Mr. Aman Shah to actually collate the questions. And I request all the members so far, and we have 44 members online, and also many members are there, quite 30 to 40 members, another 40, 50 members are there on YouTube. So may I request even the YouTube members and the members who are in Zoom to type your questions in the chat box. In the chat box, those who are watching live in YouTube, please type it in the chat box in YouTube. And those who are watching Zoom, please type it in the chat box here, so that the coordinators will be collating those questions, and they can and we can deliberate on that. And another 10 more minutes, I'll try to actually put forth before you some more pointers, especially with respect to documentation. Now, I want to make one more observation to all of you. And this is the Q&A from the FAQ. I'm taking this, whether ICA registered RVO has adopted any valuation standard. Answer is yes. The valuation standards as issued by the Institute of Chartered Accountants of India have been adopted by ICA RVO, and the valuer enrolled with ICA RVO shall comply with ICA valuation standards. This is very important. Now, please look at the other question. Whether a valuer is required to comply with the valuation standard adopted and issued by ICA RVO? Yes. As per Rule 8, just now I showed you, 8.3. The registered valuer shall, while conducting a valuation, comply with valuation standard as notified or modified under Rule 18. Actually, there is no such that has been notified. Since ICA RVO has adopted the valuation, members of ICA RVO are required to comply with ICA valuation standards 2018. So it is applicable. Okay. So for the members of ICA RVO who are registered valuers. Good. Now, I want to make another very, very important point. I was referring to the formats. So we have an audit report format. We have SA 700, SA 704, SA 705, key audit matters. So all this we have we have the formats. We have a very good arranged format, paras, which para, first para, second paras, everything is there. Now, do we have a format, a statutory format for evaluation report? Maybe that's the dream, and that is what everybody, but you cannot have a single format. So like how you have an audit report, for a clean report, you have a format, for a qualified report, you have a format, for a disclaimer, you have a format, for key audit matters, you have certain paragraphs. So like that, so you have to develop, maybe we are on the nascent stage, we are the beginning stage, and in the years to come, this 59.1, please look at 59.1 and 59.2, draft valuers will 2020, 59.2. I want everybody to pay your attention here to the last 3 lines. A valuer shall conduct, render valuation services, and prepare valuation report. Please look at this. Prepare valuation report in such form and such manner as may be specified by rules. By rules. So there will be the valuers' rules, the valuers' valuation report rules, the valuers' valuation report land and building rules, the valuers within bracket valuation report for plant and machinery with close the bracket rules, the valuers open bracket the valuation report for securities or financial asset close the bracket rules. All these rules will be evolving. And maybe to start with, we'll have 3 formats, and as days goes by, the formats will actually multiply. Why? In land and building also you have the various models are there. Plant and machinery have various models. Purpose is different. You have maybe some 10 to 12 purpose. For each and every purpose, the model will differ naturally because the objective will be different. Purpose is different. Premise will be different. So the base will differ. So therefore, and base, you have to explain how you have arrived at that base, why you arrived at that base, all this. So therefore, 59.2 has mandated that there will be a format. And this is a very, very good news, that unlike only the heading, today, heading will be there. What is the content and how many lines should be there? 2 lines, 3 lines, 4 lines, 5 lines, 10 lines, 20 lines, 20 pages. How much each should have, what you should give, what you should not give, what minimum mandatory you should give. Actually, your audit reports format, they give a minimum standard. What you want to add, you can add more. You can add 4 lines, you can have 40 lines also. But what is given there has to be there, and maybe you have to customize it and you have to give that report. Similarly, you have a format, form and manner. So the days are not far off. Please wait. And this is the right time actually for us to tune ourselves. Yes, the days are going to be very, very formal and standard oriented. And maybe if we tune it now, the time will come when the mandate will, instead of directing us, since we are already following it, we'll never feel that there is a mandate applicable for us. We are already following the standard as per 59.2. So that's very, very important. And I'll take you to another point which I mentioned at the beginning. This is again taken from the valuation report definition of Canadian business valuators, where I said the valuation report should have a conclusion. That is again been reiterated in 59.7. 59.7, they made it very clear. This is also a part of your draft valuers bill 2020, which says the valuation report shall not carry a disclaimer. Shall not carry a disclaimer. Very clearly they have mentioned. That means it should have a conclusion. What is the corollary of this? Shall have a conclusion. Valuation report shall not carry a disclaimer. So what is the corollary? Valuation report shall have a conclusion or condition which is potential to dilute the responsibility. No, it is wrong. And because, why they say you don't give a disclaimer? Because valuation report shall be admissible as court evidence, as expert evidence. And please look at ICRVO 202 para 46, which speaks about documentation. The valuation documentation is not limited to records prepared by valuer, but may include records such as minutes of the meetings with the client, with the those people who are actually information providers to you. So minutes with them. So that will actually have an evidence that you have actually done your homework to actually verify the veracity of those inputs. before you take in your valuation report. So it's not an ordinary thing. It's not valuation. It's not just calculation. Calculation is only one part. It's only arithmetic is only one part. So before arithmetic, you need to collect the data. So post arithmetic, you have to do the conclusion, that is the reporting. And reporting, you have to do it very properly, pakka, and you have to narrate it appropriately. So that is where, and today's valuation report, the best valuation reports. So if you have the intention to actually narrate appropriately, naturally the valuation report will enhance. And over a period of time, it's like writing a book. It is like writing a book, writing a mini book, writing a mini short story book. So therefore, you write a book and again you see it for the first time, second time, there will be a revision. And second time revision, third time revision, the report will come much better. And I'll say this is a very good practice. Keeping the pointers, these pointers, what is the pointers? Please look at these pointers. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 17 pointers. These 17 pointers minimum. Maybe you can have even more than this. So we have another last 2 minutes. So I'll just conclude with 2 more points. Do you need a management representation? Whether that will help us. So my view is you should have management representation letter, but management representation letter cannot be an alibi for you to say, no, they have already said, so therefore I didn't do. No. You have to actually, as a valuer, you have to do a responsibility or discharge your responsibility. You can't say, no, it's management representation they have given, so that I have taken it. So you have to actually, since you are giving a conclusion, I repeat, since valuer is giving a conclusion, valuer is not a calculator. I repeat, valuer is not a calculator. He is not doing calculation. He is doing valuation. He adds value to his work, to the number, and the number is sanity number. So it is not a number taken from clouds. So therefore, the management representation letter will give some input. That's all. But that cannot be an alibi. That cannot be a factor that should be depended upon, or that cannot be a factor that has to be factored in your valuation report. Please look at this. The decision to obtain an MRL is a matter of judgment by the valuer. You take it, you don't take it. But you can take it. There may be certain circumstances where you may need to get inputs, because a lot of business data, economic data, you can go to market, you can actually Google it and you can find out. But the business data, internal information, you need to actually get only from management. So therefore, that is a place where, and whether that will have an influence on your valuation is a question mark. If at all it has an influence, better to get a MRL. So therefore, sometimes it may not be influential. So, MRL, if it is obtained, MRL is not a defense for value. This is para 38. Para 38 of what? IC Argo 202. They made it very clear. In that itself standard, they made it. The existence of MRL shall not preclude the valuer from exercising reasonable skill and care with respect to information obtained regarding the valuation. So they made it very clear. Just because MRL is there, that cannot preclude the valuer from exercising the skill. No. They have already given that number. I will take it. I will not do my work. I will not do my mathematics. I will not do my verification. I will not do my review. So all those, I will not do my corroboration. That's not the fact. Okay. Last but not the least point, we have come to 4:50. We have the last 10 minutes for Q&A. These are all the documents you must have a file. Once valuation report is over, not all the valuation reports should be kept in one file. Each valuation report should be one file. And from where it will start, scope of the valuation, engagement letter, appointment letter, tabulation of data, what are the data you have taken, calculation, working. You should not say, no, I have done the working in my Excel sheet, so I'll keep it there. No, take a printout, keep it. The data, what and all you have taken, what is the assumptions, how you arrived at KE, how you arrived at growth rate. It is a 2-stage or 3-stage growth. Third stage growth, why you took 4%. The terminal value, on what basis you arrived, whether you took FCFE or FCFF, free cash flow of the equity or free cash flow of the firm. Why did you arrive at free cash flow of the equity? Whether free cash flow of the equity is dividend or dividend, if it is not a dividend declaring firm, whether it is the earnings, which one you have taken. You have to make it very, very clear. And you cannot say that everything it is there in Excel sheet, I have done it. So we need to actually have a pointers. So the deducing why these data are taken from where, and these data have been assimilated and accumulated, and that workings you must have it in your file, and also the details for that numerics. Workings undertaken to arrive at the value, copies of the circulars, legal provisions based on which you have taken a stand. The basis, that is whether it is a liquidation value or whether it is a synergy value, which value you have taken, whether it's fair value you have taken, market value you have taken, market rent you have taken, which is the base you have taken. What are the approaches? Is it income approach? Is it market approach? And what is the methods in that particular approach? Or a combination, you have taken 2 approaches and 3 methods you have taken. If you have 2 approaches, 3 methods, you have to reason out others and choose the reasonable method that will be the value of that particular asset, subject asset for valuation. So very important. You can't give a weight. So I have done 5 calculations, so I'll give 20% for each and I'll take a weighted average. No, wrong. Absolutely wrong. So that is what the standard also prescribes. That is called weighting. How much you will give weighting, not WEITING, WEIGHTING. So how much weighting you will give. Assumptions and special assumptions. Copy of the signed valuation report is huge. That must be there. No, I don't want to keep. I've given the copy to the client. No, you must keep a copy in your file. So therefore, naturally, a file will be big. And after, of course, at the end, you must have a bill, whether the bill has been with the GST or without GST. I have received the payment, when that payment was received, cash or in kind or in a bank account. Until such time, till beginning, till end, the file should be built up. And the MRL with this. So guys, thank you very much for the patience what you have been with me throughout, and a special thanks to Dharam Singh, CAPK Singhal, Naveen Jinger, and my next speaker, senior member CA Mayur Chokshiji is also live. Thank you very much, Mayur Chokshiji, for joining us on time. And thank you very much, members, for being with us for this particular evening and bearing with me for the Sunday evening, 4 o'clock to 5 o'clock on Bulletproof Valuation Report. Thank you very much. So over to Dharam Singh and team for the concluding and for the Q&A session. Thank you.
Thank you, sir. Sir, Q&A section में क्वेश्चन चैट बॉक्स में क्वेश्चन था, सर ले लिया आपने? एक मिस्टर मारुति इरांकी ने ये क्वेश्चन किया है सर.
Murthy Aranki.
Yes, sir.
Yeah, let me read that question. Murthy Aranki, the valuation report shall not have a disclaimer. Correct. So in case some important information document is not available, can we say in the conclusion that in case of availability of such and such a document, the valuation is subject to change? No, you can't say that. So our mention that this valuation figure is based on information made available, that is correct. So your valuation is based on 7 pointers. So if at all they give additional pointers, naturally your valuation will change. But your valuation is only based on these 7 points. So never give what not given, because of that your valuation will change. That actually doesn't give strength to your valuation. Whatever that gives strength to your valuation, that only should be mentioned in your valuation report. Those pointers that actually negate, that actually dilutes, never give. Next question, please. How to compute a liquidation value under IBC for a special purpose company like a toll road project? You mean to say that company is under liquidation? So I'm presuming that the liquidation order has been ordered by the National Company Law Tribunal. Now the liquidator has to find out what is the liquidation value. Good. Now, for a toll road project, maybe whoever is ready to actually take over, because it will be actually a BOOT, what do you call it? It's a PPP contract. So private public partnership contract, where the present the contractor is not in a position to actually run it over because of the financial constraints. He will actually have there will be one of the term in the contract, PPP contract, 300 page or 3000 page contract, that possibly the contract can be diluted in case it goes far. So therefore, with the permission of the government and with the permission of the contractee, this can be done. Number one. Number two, so you will go by income approach and arrive at the minimum liquidation value, and you have to bring an investor to actually settle the existing liabilities, and so that the new. So therefore, the only best option is the income approach with respect to a toll road project. Next question, sir. Murthy Yaranki. Oh, second question. Toll road project does not have any physical asset, only the right to collect. That is why I said it's income approach. It's income approach. I already mentioned this. Next question, sir.
सर थैंक यू सर। आई थिंक मैंने फेसबुक यूट्यूब सब जगह पे देख लिया, यही क्वेश्चन आए थे हमारे।
ओह ओके
ओके सर, तो थैंक यू सर, बहुत अच्छा डेलिब्रेशन था और आपको सुन के बहुत अच्छा लगा। मैंने पहले वाराणसी ब्रांच में आपको सुना था पूरा डिटेल में, तो आज सेकंड टाइम आपको सुन रहा था सर मैं।
नमस्कार मयूर जी।
नमस्कार सर जी।
थैंक यू
Sorry, I had to miss your session because my work is going on even on Sunday. So
nice चौकसी जी, आपका दर्शन होके धन्यवाद।
Same with you, same with me. Namaste. Namaste to all of you.
Now I request to CA PK Singhal, ex chairman Noida branch, kindly thanks to CA Gopal Kishan Raju ji for another wonderful session. सर आपका प्रवीण जी, आप माइक ऑन कर लीजिए। हाँ जी बोलिए सर प्रवीण जी।
थैंक यू धर्म सिंह जी, डबल थैंक यू, क्योंकि आप इतने अच्छे स्पीकर को आज लेके आए हैं वैल्यूएशन के लिए। उन्होंने काफी अच्छा डेलिब्रेशन दिया है और के पॉइंट जो थे वो काफी अच्छे थे, और मेन पॉइंट था डिस्क्लेमर। अब तक मैं सोचते थे कि इसमें डिस्क्लेमर दे के हम वैल्यूएशन रिपोर्ट दे सकते हैं, बट द मेन केस वी कांट गिव एनी डिस्क्लेमर इन वैल्यूएशन रिपोर्ट लाइक अदर रिपोर्ट्स। It's a good point for us. Or other elevation for key points of valuation report, all are the good. Good, no, it may be best, because the valuation report is nowadays is a main thing for valuation of various assets of different regions, maybe in liquidation, maybe over other purpose. Now we are very thankful to Sri Gopal Kishan ji for deliberation, such so beautiful deliberation on particular assets. Thank you Raju ji. Thank you.
थैंक यू प्रवीण सर। थैंक यू गोपाल किशन राजू जी सर। तो हम आपको धन्यवाद करते हैं सर, और फ्यूचर में हम आपको फिर कॉल करेंगे सर, क्योंकि आपके जो टॉपिक मेरे पास पूरा लिस्ट डाउन हुआ है, तो सारे टॉपिक ऐसे हैं जो हमारे सीए फैटर्निटी के लिए बहुत वैल्यूएबल है। तो मैं एक एक टॉपिक पे सर आपको बुलाता रहूँगा। बहुत अच्छे टॉपिक है, मैंने डिस्कस किया था मेरी कमेटी में, तो सब टॉपिक पे बोला था कि राजू जी को इस टॉपिक सब पे बुलाएंगे हम लोग। तो सर आपके नेक्स्ट टॉपिक का वेट करते हुए आज आपसे विराम लेते हैं सर। थैंक यू सीए गोपाल किशन राजू जी, थैंक यू सर। नाउ सर गुड आफ्टरनून सर, रिस्पेक्टेड सीए मयूर चौकसी सर। गुड आफ्टरनून सर।
गुड आफ्टरनून टू ऑल ऑफ यू।
सर आप मेरी छोटी सी रिक्वेस्ट पे मेरे साथ आ जाते हो, मेरे को बहुत अच्छा लगता है कि मेरे को
आप इतना स्वीटली बात करते हो सर जी कि nobody can deny you.
सर तो सर आपका ये जो आशीर्वाद है मेरे पे सर वो बना रहे, और हमारे स्टडी सर्कल पे भी बना रहे सर। बहुत अच्छा है।
एनी टाइम
ओके सर। नाउ आई रिक्वेस्ट टू सीए नवीन जिंजर, डिप्टी कन्वीनर श्री फोर्ट सीपी स्टडी सर्कल। तो प्लीज आप वेलकम करो सर का। नवीन जिंजर।
गुड इवनिंग सर।
गुड इवनिंग
सर। I, on behalf of City Forts CP Study Circle, I welcome CA Mayur Choksey sir for today's session. I hope your session will be very active and interactive. Now I request Aman is there to read sir's profile.
हाँ सीए अमन शाह, प्लीज आप सर का प्रोफाइल थोड़ा ब्रीफ कर दीजिए, क्योंकि हमारे ऑडियंस जितना भी है फेसबुक यूट्यूब और हमारे जूम पे, तो एक ब्रीफ प्रोफाइल सर का जरूर उनके सामने होना चाहिए।
श्योर सर। थैंक यू धर्म जी। वेलकम यू चौकसी सर।
थैंक यू।
स्टडी सर्कल। सीए मयूर चौकसी is a practicing chartered accountant for almost 40 years. He handled the various extra large audits, more than 10,000 crores turnover companies. He is one of the expert panel of consultant of one of the big fours. He is an expert in the international financial reporting standard, now which is applicable to all the listed companies. He handling the various special assignments, say evaluations, validations of IT-enabled controls and the processes. His other expertise in the forensic, accounting, auditing, fraud deductions, and MS Excel. He conducted more than thousands training sessions across India as well as the other geographies of the world. He took the sessions on the corporates, SEBI, SFIO, government organization in India, as well as the abroad. He is also webcast on the television of ICAI. He is a committee member of the ICAI, Western India Regional Council of ICAI, IndAS Implementation Committee, core committee member of Mumbai Cyber Lab, a joint venture of Mumbai Police and the NASCOM. He is an author on IFRS-based financial statements, international and Indian-based, 2 volumes published by the ICAI, contributed to the illustrative IndAS financial statements, a publication by the WIRC of ICAI. He developed the various training modules for the government audits as well as the finance departments of the government finance as a resource faculty for the public environment expenditure and its peer review. Sir is also in the panel of MSME Training Institute established by the Government of India, Ministry of MSME as an expert for finance. Sir, we are glad to hear you. Sir, welcome you, sir, on a Shreveport CPC study circuit. Welcome you, sir.
Thank you, Aman sir. Sir, respected CA Mure Choksi sir, sir, now mic in your hand, sir. तो ओवरव्यू जो आपने आज हमें इंडियन अकाउंटिंग स्टैंडर्ड पे देना था सर, प्लीज सर, वी वेटिंग फॉर दिस सर.
Okay, thank you. Thank you, everybody. Good evening to all of you, the committee member, co-panelists, co-faculties, and thanks to CA Aura Foundation and CD Fort CP Study Circle. Let me just ask you, just internally, just think, what is the role of an accountant? Is the role of an accountant limited to just completing the accounting, or is it beyond that? When we say role of an accountant, I don't say that it is just completing the books of account and preparing the financial statements. In my view, role of an accountant from the management perspective is to compile all the information so that you get true and fair view of the accounts. But the question arises, do we get true and fair view of the accounts, correct profit or loss, the way we are accounting? Let me give you just small illustration. मेरे पास एक गाड़ी है, I want to sell it off, और मैंने मन्नत मानी है कि गाड़ी में से जो भी पैसा आएगा, that money I will give it to माता जी को चढ़ावे में दे दूंगा मैं. प्राइस निकाली, गाड़ी की प्राइस आ गई 5 लाख रुपया. तो मैं बोला कि 5 लाख रुपया में बेच दूंगा, माता जी को मन्नत में चढ़ा दूंगा मैं माता जी को. Then I was talking to one of the chartered accountant who was very good in valuation and restructuring, etc. तो उसने बताया, let us restructure your deal so that it will be in your benefit. I said, okay, let's restructure. तो मेरे पास एक साइकिल भी थी, तो उसने एक ऑफर निकाली कि you buy cycle for 4,99,000 rupees. You get vehicle 4-wheeler for 1,000 rupees. धर्म सिंह जी आ गए, उसने बोला ये 5 लाख रुपया ले लो, आप मेरे को गाड़ी और साइकिल दोनों दे दो. Now, what is the role of an accountant to record this particular transaction? And based on that, मेरे को माता जी को कितना चढ़ावा देने का, 1,000 या 4,99,000 rupees? Naturally, you will say कि on paper, based on the papers, करेक्ट व्यू इज आपने गाड़ी तो 1000 में बेची है, साइकिल 499 में गई है, तो 1000 रुपया माता जी को चढ़ावे में देना है. बट आई एम आस्किंग यू, not according to me. And if you think logically, you will say, no, this is not the correct way of accounting. Though standard may say anything, but this is not the correct way. And in view of this, probably there is a shift in accounting methodology. The standard is for as IndAS is concerned, there is a shift in that particular thing. We'll discuss about all these things. What is this particular thing? The question arises, why IndAS and why not continue with AS? Why the world over has taken over this IFRS where and India adopted IndAS? According to me, there is a shift in the manner in which the business is carried out, the way I was talking to you. Similarly, there are a lot of transactions like that. कि मैं laptop purchase करूंगा, printer is free. Now, if the printer is delivered before 31st of March and laptop is not delivered, laptop is delivered and invoiced in the month of April, should I record that particular transaction with any value in the books of account as on 31st March?
चौकसी सर मैं आपको
Should I
डिस्टर्ब कर
record
रहा
my
हूँ.
revenue or not record?
चौकसी सर
You
मैं
will find a
डिस्टर्ब
lot
कर रहा हूँ.
of novel type of transactions, novel type of agreement. We were discussing, you were discussing about this toll project, etc. Novel transaction, each agreements are different by itself. The world has become very competitive and there are global practices. Company wants to do the business globally. There is no limitation of the geography now. It's not within India. Indian company is going abroad. Foreign companies are coming to India. So how are we going to talk in terms of accounting methodology? And because of all these things, there is a need. There was a need to come out with various standards, which will reflect the manner in which the business is carried out. Now, if you study various transactions for AS, you will find for all these things, there are no standards. Retirement benefit plans, there is no standard. Hyperinflationary, no
चौकसी
standard.
सर मैं डिस्टर्ब कर रहा हूँ
Hyperinflationary is
आपको.
not applicable to Indian company, but what if Indian company is invested into hyperinflationary economy? How do we record? Because that is going to be subsidiary and that subsidiary's books of account needs to be consolidated into my accounts.
चौकसी सर थोड़ा डिस्टर्ब कर रहा हूँ. सर चौकसी सर मैं डिस्टर्ब कर रहा हूँ थोड़ा सा आपका. हेलो सुनिए सर.
Hello. या धर्म जी, सॉरी, स्क्रीन शेयर नहीं हो रही है. ओके. हो रही है अभी? हाँ, पीपीटी खुली है, मेरे को यहाँ दिख रही है. शेयर स्क्रीन, शेयर अभी. यहाँ मेरे को दिखा भी रहा है स्टॉप स्क्रीन शेयरिंग. यू आर स्क्रीन शेयरिंग राइट नाउ लाइव. यहाँ दिख रहा है मेरे को मैसेज. और बाय. Okay. Sorry for interruption. I hope you all are, if you are not getting the screen share, you can always write to me. I will share this PPT. Okay, so hyperinflationary, Indian company may invest into hyperinflationary economy. So how to consolidate those things? Share-based payments, lot of new ventures, startups have share-based payments. There is no standard for share-based payment. There are only guidelines issued by income tax as well as SEBI. But there is no standard. Business combination, amalgamation, etc. There is a new standard which has come. So all these things, because of all these things, there was an urgent need to come out with the new standards, which will not only incorporate the way the business is carried out, and also it will have more and more new types of transaction which are coming up will be available to you. I will take you to the basic IndAS framework. Like, you must be aware about the preface to accounting standards. Just like preface to accounting standard, there is IndAS framework to IndAS. That is the basic structure around which the IndAS or any standards are formulated. So in that particular thing, there is a principles and objectives are mentioned. It's a very small volume. All the standards has to be within the perimeter, and it defines as to what is the definition of asset, liability, equity, income, and expense. But because the transactions are complicated, because everyone would interpret these particular elements in a different manner, there are standards for specific types of transactions. It's only a concept, and one of the major thing is substance over the form in the IndAS framework. What is the meaning of substance over the form? I had given you this particular transaction. I am selling the car for 1,000 and cycle for 499. What is the substance over the form of this particular transaction? It is not that the car is sold only for 1,000 rupees and the cycle is for 499. Nobody will believe that. So substance over the form is in 5 lakhs rupees. I am selling vehicle, four-wheeler as well as bicycle. So 5 lakhs rupees on a rational basis, I have to divide between vehicle, four-wheeler and the bicycle. That is what the substance over the form. And in many cases, you will find substance over the form, you will have to find out. We'll discuss all these illustrations as we go further. It sets out this framework, sets out the concepts, various concepts, a platform which the standards are developed. It is not an accounting standard, and it does not contain
टॉक्सी सर, सर आपकी वॉइस नहीं आ रही है, थोड़ा देख।
अभी ओके, आई डोंट नो क्या हो रहा है आज। Yes, so substance over the form. So in 20,000 rupees, the economic reality of the transaction is I have to supply you laptop as well as printer. So this 20,000 rupees is to be allocated as and when it is covered. Financial statement should be neutral.
Yes, so substance
Prudence, conservatism, all these things we are aware. Complete in all respect.
is I have
Even if there are constraints, you have to complete those accounts. You cannot wait, and therefore there will be estimations made in the financial statements.
this 20,000 rupees is to be allocated.
Timeline, balance between cost, benefit, etc. is to be maintained. These are the characteristics of any financial statement.
Yes. So substance over conservatism.
Let us discuss what is the definition of an asset. Asset is a resource controlled by an entity as a result of past event and from which future economic benefits are expected to flow to the entity. Now, this is the basic definition of the asset in the framework. And the same definition is there even in my AS. So how do we take it forward? So first of all, to recognize asset, you have to find out, is it the resource? If yes, is it controlled by me as an entity? As a result of past event from which future economic benefits are expected to flow. What if the future economic benefits are not expected to flow? In that case, what we do in accounts as per AS also is the provision for bad debts. Let's say we impair the assets because as per us, as per calculation, future economic benefits of the CGU or a particular asset is likely to be lesser than its present book value or at the price at which it can be sold, and therefore whatever is the difference, to that extent we provide impairment. Now, simple but not applied. You must have heard, is there in the subsequent slide, expected credit loss. What is expected credit loss as far as banks are concerned? What do the bank do? Whenever there is a default in the loans, at that point of time, they will create NPA, provision for non-performing assets. They will recognize on a certain criteria. So in the first or second or third year of the bank, there will not be any NPA. But what this asset would mean that on a portfolio basis, today's loans and advances based, what will be the expected credit loss in future, even if there are no NPAs as on today. So you provide for those expected credit loss as on today. And that is what the meaning of future economic benefits are expected to the entity. Now, this particular concept is not visible, and therefore we say future economic benefits means whatever is written in the standard, but those standards are now made mandatory by way of expected credit loss, ECL. And there are so many things like that. Liability, the definition. present obligation of an entity arising from the past event, the settlement of which is expected to result in the outflow of the expected outflow of the entity's resources. The thing is present obligation. There is an obligation as on today, as at the balance sheet date. If there is an obligation undertaken by the entity, you have to consider that as a liability, provided it is from past event and it will result into outflow of entity's resources. It may be barter also. We have illustrations for all these things later on. Equity is the residual interest. Everybody knows equity is nothing but the asset minus liability. But there are many transactions in IndAS which will go directly to equity. It is not routed through profit and loss account. Because profit and loss account, you will record only income and expenses. What is the definition of income? Increase in economic benefit not resulting from contributions made by the equity holders, and expenses decrease in economic benefit not resulting from distributing to equity holders. So what if certain transactions are neither income nor expenses nor asset nor liability? How do you recognize that? Then that will go directly to equity. So in IndAS, when you study, you will find lot of adjustments which will state that this will be directly debited or credited to equity, because those are the transactions which are neither asset, liability, nor income, nor expense. This is standard. Item is classified, recognized when it is included in financial statement. Item should be recognized, probable there will be inflow or outflow. Revenue should be earned, matching principle before it is recognized in the income. Expenses are recognized when there is a decrease in asset or increase in liability. These are all recognition principle, standard thing. There are different types of cost defined in the framework in IndAS. One is historical cost. Everybody is aware of this. Current cost are the asset recorded that would have to be paid at the balance sheet date. Settlement value, present value. You will have to discount various aspects to find out the present value of the particular thing. Many transactions are recorded at present value in IndAS. As far as AS is concerned, we are recording present value as far as provision for gratuity concerned, provision for leave encashment is concerned. That is discounted by the actuary and they incorporate those in the certificate. But in IndAS, there are many cases where the present value is recorded, including for the loans. We'll come to those things. So what are the techniques embedded? If I want to learn on a macro level overview of IndAS, what should I do? In that case, first principle is substance over the form. So there are transactions where you have to find out what is the substance over the form and record the transaction as per the substance and not the form in which it is carried out. You need to ascertain the fair value and the present value in certain transactions. Fair value, say for example, agriculture thing, is everything is valued at fair value. So difference between the fair value, opening fair value, closing fair value is my revenue, sort of, minus the expenses, that is my profit or loss, fair value. Decommissioning cost, provision for decommissioning cost is considered because I'm going to incur that particular cost after say 20 years, 30 years, 40, 50 years, whatever may be the duration. I expect that the liability will be X amount. So my obligation as on today is not 1 crore rupees. Discounted 1 crore rupees may be 5 lakhs rupees. So that is the present value at which I will record my decommissioning cost. Most of the transaction, or rather all the transactions, are recorded at cash and cash equivalent. What do you mean by cash and cash equivalent? Suppose I am going to get money after some time. In that case, what is the present value? Cash or cash equivalent as on today, the transaction will be recorded at that cash and cash equivalent. Suppose I have given the buyer the credit of 1 year and I'm selling it for, say for example, I'm buying car at 0 EMI. I'm selling the car at 0 EMI. You are going to pay me over 36 months. I prepare the invoice of say 5 lakhs rupees payable say 15,000 or 20,000 rupees over next 36 months. Then I will have to find out what is the cash or cash equivalent of this 20,000 installment for next 36 months, and that will be considered as cash and cash equivalent. And I will record the transaction at that particular price. So 5 lakhs rupees, 20,000 into 36 months. So say it will come to 7,20,000. Discounted value may be say 560. So 560 is for the sale of car, and remaining amount is the interest, which will be recorded as interest income over a period of time. You have to bifurcate between what is policy and estimates. Depreciation is not considered as the policy. It is considered as the estimate. Many transactions you may have to combine or you may have to segmentize. 2 transactions you may have to combine to record that particular transaction, or same transaction you bifurcate into 2 parts and record it separately. Like I was talking to you, vehicle sold at 0% rate of interest. That particular transaction will be segmented into 2 parts. One is towards sale of vehicle, which will be booked as and when the vehicle is delivered. And another part is interest, which will accrue over a period of 36 months. Onerous contracts. Onerous contracts means the expected benefit out of that contract is less than the cost. Then the contract becomes onerous. And as and when the contract becomes onerous, I have to provide for that particular thing on that particular date. I need not wait till the contract gets over. Expected credit loss we discussed. There is nothing like prior period item in IndAS. If there are prior period items, errors, omissions, etc., then you have to what is known as restate the accounts, financial statements. In that case, you have to give the effect on that particular date, retrospective, rectify the accounts, prepare the balance sheet, opening balance sheet for the previous year for which the financial statements are recorded. So you will have to prepare 3 balance sheets, 2 profit and loss account, 2 cash flows, and 1 notes to account. And overall, everything is principle based. There are no rules in IndAS. The principle in nutshell, if I have to tell you, is that understand the economic reality of the transaction and record it accordingly. And if there is nothing, find out what is the conclusion arrived applying the framework principles, if the standard is silent on that. If you understand broadly this particular aspect, then you are through with IndAS. Now let's consider few transactions. Preference share capital, is it capital? Now, let's go back to the definition of the liability. Present obligation of entity arising from the event settlement of which is expected to result in outflow. If the preference share capital is issued, is there going to be outflow in future? The answer is yes. Maybe after 5 years, maybe after 10 years. So it is not a capital. It is a liability. And therefore, the preference share capital will be considered as the liability. If you have issued debentures, 0%, is it reality? Answer is no. It is not logical. So instead of giving the debenture holder at discount, I will issue at par, but I will tell them 0% rate of interest. So what I will have to do, discount it, find out what is the debenture value as on today, present value, and then differential amount will be considered as interest expense over a period of debenture period. Proposed dividend, is it the dividend? Of course, now AS also states the same thing. Proposed dividend, the liability arises as and when the board AGM declares it. So there is no liability as on 31st of March, and therefore proposed dividend is out of balance sheet as on 31st March. Convertible debentures or convertible preference shares will be divided into two parts. One is towards equity and another one is debenture portion, borrowings, as per 109. There is a methodology given how to calculate that particular thing. Decommissioning cost, again, AS has introduced this. So decommissioning cost will be recorded the day the asset is put to use. And every year, unwinding will take place. So 1 crore rupees, if it becomes 10 lakhs rupees discounted value, then 10 lakhs rupees will be the provision as on first year. So the entry will be asset account debit to provision for decommissioning cost. At the end of the year, on the asset, you will provide depreciation on 10 lakhs rupees plus whatever is the other cost of the asset. And 10 lakhs rupees, suppose the discounting is at 10%, on 10 lakh rupees, you will add 10% of that. So 1 lakh rupees, so 11 lakhs. So your accounting entry will be finance expense account debit to provision for decommissioning cost, 1 lakh rupees. So provision cost, decommissioning cost will become 11 lakhs. Next year, 11 will become maybe 12.1, etc., etc., etc. At the end of the period, it will become 1 crore. And you will discharge that liability. The provision account is zero wise. In IndAS, you can reverse the impairment cost, including NRV in the subsequent period. If it becomes positive, you can reverse this loss of NRV in inventory. Let's scan through overall basis various standards. Revenue recognition. As far as AS is concerned, the revenue is recognized when the risk and rewards are transferred. That is not the case with IndAS. IndAS 115 states the core principle of revenue recognition. The core principle of revenue recognition is the entity shall recognize the revenue to depict the transfer of promised goods or services to customer in an obligation that reflect the consideration to which the entity expects in exchange of goods and services. So what is that? Recognize, depict the transfer. What is the promised goods or services I have given you? I have promised you that for 20, I will supply you laptop and printer, right? So transfer of promised goods or services to customer that reflect consideration to which the entity expects to realize. So how much am I expecting for that? 20,000. So 20,000 will be the revenue to be apportioned between two parts. One is printer and another one is laptop. So as and when, suppose this out of this particular, there is a formula, allocation formula. We'll discuss that COPAR. It's a 5-step formula model. So as per that formula, suppose the printer would be worth 4,000 allocation and laptop is 16,000. So as and when I deliver laptop to you, I will record 16,000 as revenue. As and when I deliver to you printer, I will record another 4,000 rupees as the revenue. So in March, I have supplied you printer, though on paper it is free, I will record 4,000 as the revenue. Now, what is this 5-step model? I say it is COPAR. First, understand the contract. What is the contract with the customer? In fact, the title of the standard itself is contract with customers. So what is the contract? So contract will state you what is the consideration, what is promised, etc. From the contract, find out what are the obligations undertaken by the company, by both the parties. So obligations is to supply you printer as well as laptop. Obligation. In a working condition, standard, customary, whatever is required. The price. What is expected? The price. That is again complicated thing. So price will be there. That price will be allocated. A stands for allocation. That will be allocated to what is promised. And R is revenue recognition. As and when the performance obligation is completed, I will recognize that as my revenue. Looks simple. But when you study various industry, etc., you will find it difficult. Say, for example, I buy the phone and I expect, and the company is telling me, okay, you take this phone and along with the phone, you will get data and voice free. So what is the obligation of the company? The obligation of the company is that they will supply me this phone, physical instrument, plus certain data for a certain period and certain voice for certain period. So whatever consideration I'm getting will be divided into 3 parts. One is physical phone, another one is towards data, and third one is for the revenue. Sorry, voice. As and when my obligation gets over, I will recognize as the revenue. One of the principal laid down is you can create a portfolio of homogeneous transactions. So you need not check each and every contract. You need not go through each and every contract will be recognized separately. You can create a basket of similar contract, homogeneous contract, and give the treatment for those homogeneous contract at a in a particular manner. Another thing that reflects the consideration to which the entity expects to be entitled to. So, what is the amount that I'm likely to get in exchange for this? The contract may be for 20,000 rupees, but I know normally everybody will deduct, say, 2%. Then overall basis, suppose my 2% is deducted, then I will recognize only 98% as my revenue, because I'm expecting to realize only 98%. It's a complex thing. Say, for example, I am giving you an offer. Hotels are giving you an offer. If you stay for 10 nights, 1 night is free. In a period of 12 months, if you stay for 10 nights, 1 night is free. That means suppose the company is charging you, say, 11,000 rupees per night. So for 10 nights, the company will get 1,10,000 rupees. But what is promised by the company, the hotel, that if you stay for 10 nights, 1 night is free. That means you give me 1,10,000 rupees. I will give you 1 night free. That means 1,10,000 is for 11 nights and not for 10 nights. And this particular model will be established at the beginning of the contract itself. So as and when you stay for the first night, you pay me 11,000 rupees for 1 night. I will not recognize 11,000 rupees as my revenue, because my model suggests that my average 1,10,000 divided by 11 nights is 10,000 rupees. I will recognize only 10,000 rupees as my revenue. And 1,000 will continue as my liability. In this particular thing, again, expected would mean not everybody is going to stay with me for 11 nights. So again, estimation will be made. How many people will cross 10 nights? Based on that particular thing, homogeneous transaction, it will be decided. Lease, again complicated. There is no concept of operating lease as far as lessee is concerned, because substance over the form, when we enter into an agreement, I am getting right to use this particular premises or whatever is the asset. And therefore, I should recognize that as my asset in my books of account. As soon as I create asset, I create liability for that. So there will be right to use as an asset and lease liability on the other hand. And these lease asset and lease liability, right to use and the lease liability, both will be recorded as whatever is the expected outflow discounted as on today, the present value. So say, for example, I have entered into an agreement for 36 months. The rental is 1 lakh rupees per month. So my expected outflow is 36 lakhs over 36 months. 36 lakhs discounted. Suppose it discounted value works out to, on the day one, at the date of inception, works out to 30 lakhs. Then on the date of inception of the lease, I will record right to use at 30 lakhs and lease liability at 30 lakhs. So first entry will be right to use account debit 30 lakhs to lease liability 30 lakhs. First month, I am paying rent of 1 lakh rupees. So this is toward discharge of lease liability. So I will debit lease liability, credit bank account by 1 lakh rupees. At the quarter end or month end, at the year end, whatever is the interest portion on 30 lakhs, I will credit that. So my closing lease liability will be opening lease liability, which is 30 lakhs, plus interest accrued on that, say in 3 months, 1 year cumulative is say 1 lakh rupees. So 30 plus 1, 31 minus 12 lakhs rupees I have paid. So my closing lease liability will be 31 minus 12, 19 lakhs. 19 lakhs will become whatever amount in the second year, and third year it will become 0. On the other hand, right to use is an asset. This asset, the economic benefit of this particular asset is going to be over a period of 36 months. So 30 lakhs will be written off amortized over a period of 30 months equally. This is the lease. Big shift in the lease accounting. From the lessee's perspective, as far as lessor is concerned, whatever is there in AS, more or less it is the same thing. There is another big shift in the deferred tax calculation. The deferred tax is to be considered as balance sheet approach. What we do as per AS, we calculate based on computation of income, whatever is the difference, book minus this, whatever is payable, whatever is the addition, deletion, net basis, we provide deferred tax asset or deferred tax liability. Here you will have to go as per the balance sheet. Take out each of the balance sheet item. So what is the balance sheet book value? What is the tax base? That is, what is the value that will be considered by the tax department as its value? On that particular asset, at what rate the tax department will charge me tax? And I will calculate on that difference amount multiplied by tax rate, I will calculate the deferred tax, which may be deferred tax asset or deferred tax liability. So it is this. There is a new concept of constructive obligation. So whenever the company undertakes any obligation constructive, that is by way of tradition, by virtue of public statement, etc. If company undertakes any obligation, that is considered as constructive obligation, and that constructive obligation also needs to be provided the day on which it is the statement is made or confirmed. Another big shift, goodwill is not amortized. Goodwill will always be impaired and not amortized. As far as AS is concerned, goodwill is amortized over a period of 3 to 5 or maybe 10 years. Here it is not amortized, it will continue in my books of account unless it is impaired. As far as Forex is concerned, there is a concept of functional currency, and that will be my basic currency. All other than that functional currency will be considered as a foreign currency. So even if I am working, even if I am a company in India, my functional currency may be US dollar, then everything I will have to convert into US dollar, and Indian rupees, whatever I spend, will be considered as the foreign currency, and then there will be exchange gain loss on those foreign currency. Business combination, I will have to calculate what is the fair value of that particular asset, what is I'm acquiring compulsorily, minus the consideration. Differential amount is my goodwill or capital reserve. So fair value, even if certain intangible assets or certain assets not recognized in the books, I have to recognize that, and all the assets and all the liabilities will have to be recognized when there is an amalgamation, etc. business combination at its fair value on the debt. There is a guidance given on the website. There are two types of website. Basically, one is for advertisement purpose. If it is for advertisement purpose, whatever is the cost of advertisement, that will have to be written off because that is not my intangible asset. But whatever is the website cost to earn out of business, future economic benefits, then that will be considered as an asset, intangible, and that will be capitalized, not otherwise. I think if you have any question, I can take up because there will be next speaker at 6 o'clock and we have 5 minutes for this particular session. And one of the things which I will consider that over a period of time, IAS will be more or less in line with IndAS. And that trend has started. For this particular in the sense, certain standards are now modified and they are made as per IndAS. I will consider, say for example, depreciation. Depreciation methodology was different. Now the methodology is more or less similar to IndAS. Presentation of financial statement, schedule 3. If you compare part A and B, one is applicable to IndAS, another one is applicable to non-IndAS entity, AS entities. If you study both, more or less they are same. Methodology is more or less similar. Proposed dividend, again, eliminated from the balance sheet because IndAS does not say so. So my personal view is that over a period of time, AS will be molded according to IndAS. Non-IndAS entity. Because that is the real both logical way the accounting should be done. More or less similar. Proposed Dharanji. Any questions? Eliminated from the balance sheet. My personal view.
सर अभी
क्वेश्चंस
नहीं सर, अभी कोई क्वेश्चन नहीं, मैं देख रहा था स्क्रीन पे। और सर आप ले सकते हो सेशन, मैं अभी सर से बात कर रहा हूँ, अभी लाइन पे आने वाले हैं 2-3 मिनट के लिए और हमारे पास टाइम है।
सॉरी
चौकसी सर, आप कंटिन्यू रह सकते हो क्योंकि अभी क्वेश्चन भी अभी है नहीं है। मैं रिक्वेस्ट करूंगा ऑडियंस से, ये कोई एनी क्वेश्चन प्लीज पुट इन चैट बॉक्स और क्वेश्चन आंसर बॉक्स, and at YouTube kindly put at the comment box, sir. So sir, meanwhile you may be continue because our respected ex-president will take 5 or 10 minutes to continue.
Okay, no problem. See, basically for any accounting perspective, whenever you are doing any accounting perspective, whether AS or IndAS, you have to consider what is logical. And that is what we forget. IndAS, according to me, is a big area, open area, new area. There is not much competition. So I would advise all of you to study IndAS in depth, start practicing in that. One of the main feature of IndAS is most of them are big clients. As of now, all listed companies and any companies with more than 250 crore net worth. That means all what we are talking about are all big companies, corporates. And there is not much competition. So I would earnestly request you all to venture into IndAS practice. It may sound difficult, but it is not that difficult. If you know AS, then you need to know only what is the difference between AS and IndAS. And thereafter, if you study, you will understand very quickly. And these are the techniques which you need to understand. Even in auditing, IndAS auditing, again, is a big area. Because the methodology will be something different. Because you have to find out what is the substance over the form. Whereas AS generally suggests that you record the transaction as per the form, what is written. Here you have to go behind the transaction to find out what is the substance of the transaction. So in that sense, auditing also will be challenging and remunerative. Even if you are into tax practice, I will tell you, I will suggest you, you need to understand what is the IndAS adjustments. Because IndAS adjustment, without IndAS adjustment, you will not be able to prepare the computation of income. Because certain adjustment will be sitting directly into your equity. Certain adjustments will be by way of recording the transaction as per present value. Revenue recognition again is a difference. Again, your interest will be different. Your lease accounting will be different, because lease as per income tax will be whatever is the rent paid will be allowable. Here you are not accounting rent paid. Here you are recording it as a RTU, right to use, and lease liability. So at the end of the day, even if you are into tax practice, you will have a bigger scope to understand, and you can have bigger client base. And to understand the complexity of the accounting and the computation of income, you need to know what is the IndAS adjustments. Yes, sir. Continue करें कि
थैंक यू सर। मैं क्वेश्चन आंसर बॉक्स भी देख रहा था, अभी कोई क्वेश्चन आया नहीं है।
ओके।
तो हमारे साथ रिस्पेक्टेड सीए सुबोध कुमार अग्रवाल, एक्स प्रेसिडेंट आईसीएआई भी ज्वाइन हो चुके सर।
नमस्कार मयूर जी।
नमस्कार, कैसे हो सर जी?
बहुत बढ़िया, आप कैसे हैं?
बस आफ्टर अ लॉन्ग टाइम।
आफ्टर लॉन्ग टाइम, थैंक्स टू कोविड।
थैंक्स टू कोविड एंड वेबिनार। यस,
करेक्ट।
राइट, वेरी गुड।
थैंक यू रिस्पेक्टेड सीए मयूर चौकसी सर। बहुत अच्छा डेलिब्रेशन था हमारा ये। तो रियली सर, आप मेरी छोटी सी रिक्वेस्ट पे हमारे साथ जुड़ जाते हो, मेरे लिए बहुत अच्छा एक गौरव की बात है सर।
आई एम ऑब्लाइज्ड।
तो सीरी फोर्ट सीपी स्टडी सर्कल कंटिन्यू सर, हमारे प्रोफेशनल को इस तरह सेवा देता जाएगा सर। हम भी, आप हमें भी सपोर्ट करते जाना सर।
थैंक यू।
Thank you. Now I request to CA Arun Kumar, convener, Siri Fort CP Study Circle. Sir, please, thanks to our respected speaker, CA Mur Choksi sir, and welcome to our respected CA Subodh Kumar Agarwal ji, ex-president ICAI, and he is next speaker for our Siri Fort CP Study Circle also, sir.
Oh, nice. Thank you, Dharam Singh ji. First of all, I welcome our ex-president of CA Institute, Sri Subodh Kumar sir ji. Most welcome to our small study circle, sir. As far as our speaker for overview of IndAS, Sri Mayur Choksi sir, he has been deliberated in very thorough detail and so minutely. I have noted down entry-wise clarifications also. So each one of us is very clear whatever Mayur sir described in his speech. So nice of you, Mayur sir. We remain disturb you off and on, and it's my proud pleasure listening you, sir, third time in this month itself. But definitely we shall be needing your support and guidance for further enhancement of our knowledge, sir. And so nice of you, sir. Thank you so much for today's webinar presentation. Now, on behalf of Siri Fort Study Circle, I welcome Subodh sir, and he has been our president of institute. So since then, I always in touch with him, and I hope we will be able to have more focus on recent changes in IBS through sir. So welcome, sir, kindly.
Thank you, Arunji, for your nice word. It is my pleasure to have this program, and I'm thankful to the Siri Fort Study Circle for giving me this opportunity to share my thought with all of you. Arunji, as you said, you are a small study circle. There is nothing like small. Now this COVID has made everybody very, bigger. I mean, you are reached to Calcutta, you have reached to Mumbai. Mayurji is probably speaking from Mumbai, and myself from Kolkata. And probably Gopal spoke from Gopal. If he have spoken from Chennai. So you have covered the entire gamut of the India. So entire India is covered from your study circle. So you are as big as any other study circle. But then you reach to people across the country for the benefit of your members. That's a great thing. I mean, your thought is very big, and I'm sure that your member will be benefited by 3 topics that today you topic already covered, and 1 topic you are going to be deliberated. So thank you very much for inviting me. The topic given to me today is recent changes in IBC. Friends, IBC, Insolvency and Bankruptcy Code. Today probably there will be no professional who have not heard about this new act, new law. It has changed the entire gamut of thought process in the country and has brought fiscal discipline in the business community. Fiscal discipline in the true sense that till this act came into force, probably we all knew as a practicing chartered accountant or professional in industry that generally the professional used not to get the kind of response they were expected. And many times I feel, and I'm candidly, I can speak here, that today when you sign the financial statement, you will be much more comfortable if certain item in the balance sheet, after the introduction of the IBC code, particularly debtors, inventory, which were the area where there was big scope for manipulation, and that in nowadays, I don't think any company will try to have any kind of interference or manipulation in that area. Friends, COVID has severely disrupted the global economy. This being global village, contiguous Indian economy could not have remained unaffected by this COVID. It has impacted each and every area of our life, that is business, that is health, that is family life, everything. If you recollect, when the COVID started, we were talking about the gross domestic product, GDP of the country, which was around 5%. The rating agency started to predict that it will go down by 2% or 1%. So different rating agencies across the globe, international rating agencies, were predicting that it may be around 2.5% to 3% in 2021. But then 2021, they were predicting that it will bounce back. And in fact, I was reading one article where it was mentioned that in 2021, the GDP growth may be more than 7%. Nobody visualized that the lockdown, after one, there will be two, second version, after there, it will be third version. Like it happened in Wuhan, where it was more than 78 days. In our country, also, it will have the same fate. We were very happy that in our country, when we started, the daily increase in COVID is 200, 300, without visualizing, whereas many consultants had already projected and predicted that the highest number will be sometime in September. And today we are seeing that it is increasing on a daily basis. And it has already surpassed daily increase of 20,000 per day. Now, how it is impacting our economy, how it is impacting the subject that I am going to speak, the Insolvency and Bankruptcy Code. Friends, today, when this pandemic is going on, the impact probably will not be able to visualize. It reminds me, once Warren Buffett has said, what Warren Buffett said, which is appropriately is fitting in this case, that it is only when the tide goes out, it is only when the tides goes out that you discover who has been swimming naked. Till the tide is there, people are inside the water and nobody can see and visualize out of the 100 people, how many are with clothes and how many are without clothes. The moment tides go down, you can then able to see how many are there without clothes. So the exact impact we can access of the COVID on the economy or our country's GDP or economy, once it slows down, the curve starts going down. Right now, the curve is going up. We don't know how far it will go, whether it will go, the curve will be reach on the top in July or August or September. So the more it takes times to the curve to go up, the more negative impact it will have. So now coming to our topic, Insolvency and Bankruptcy Code, which is directly connected and is there to address the stress. So COVID is increasing the stress in the economy. It is not only increasing the stress of the private parties, the businessmen, the industries. It is increasing the stress of the public sector also, the central government. There is a stress in the central government. There is a stress in the state government. There is a stress in the local or urban bodies. Now what is happening? The expenditure of the government has increased. The revenue has come down. To increase the revenue, that is the reason that you are seeing that, reading in the newspaper, that on a daily basis, the prices of the petrol and diesel is increasing. The prices of the diesel has surpassed the prices of the petrol. Today, in last 21 days, the price has increased by more than 10 rupees. It is more than 10-12%. We are wondering that sometime in April, May, when the crude price one day was in negative, that means you will get money if you buy the crude. Today also it is below $40. When the price of the crude was $120, the petrol price in our country was around 50 to 60 rupees. When today it is below $40, the price has come up to 80 rupees. Why so? Because the government coffers are empty. Now the government needs fund, and it is not because of the raw material price. It is because of the loading of the taxes, different kind of the taxes that will go to the pocket of the central government as well as state government. And that is very much required for the economic or society well-being of the country. That is also required, because if the government has no money, how can government come out with incentive or stimulus package that is there? So the point is, the situation is very bad. And in this situation, when this code is there, how to deal with that? Whether the government has taken steps to address the issues. So here, I'm not going on the basic thing of the code, because I presume that since I have been only asked to discuss on the recent changes, but I request you, if you have any query on anything on the IBC, I'll try to answer to that, whether it is my topic or not, any case law or any how the code evolved, or whatever query, practical query, etc. is there, please jot it down or send it to the organizer, and I'll try to respond to that. So today I'll be only restricting myself that for looking at the COVID, what government has come out, because we know that government has come out with relaxation in Companies Act, GST, Income Tax Act, Listing Agreement, everywhere it has come out. Then for IBC, what are the specific relaxation or exemptions that has come out? I'll be dealing with that. And also in March, there was amendment which has nothing to do with the COVID. That also I will deal with. And thereafter, one or two Supreme Court judgments, which I thought is very important for general member also, whether you are practicing as a in the insolvency or not, but then your practical daily professional practice also, it may be of useful. That 2-3 judgment also I'll be sharing with you. So my agenda today is it's a pandemic, and then what are the changes that has been brought by NCA, by Insolvency and Bankruptcy Code, by NCLT, NCLAT, Supreme Court, by IBBI, by CGST under for the insolvency, and then various other regulation under Insolvency and Bankruptcy Code, my dear friends, and then a few of the judgments, 2 or 3 judgments of the Supreme Court I'll be sharing with you on the law of limitations, and one particular judgment which in case of the JP Associate Limited that was there in the Supreme Court that I would like to discuss with you. Now to start with, changes made in Insolvency and Bankruptcy Code on 13th March. So this changes was already there in December, but then it was given back to the standing committee for their review, and then ultimately on 13th March, the code was amended, but it was made effective from 28 December 2019. So these are few changes which were very vital for the smooth implementation of the Insolvency and Bankruptcy Code. Now, Section 5, subsection 12, which is a definition section for corporate insolvency. There, the Section 5 to 12 talk about the appointment of the insolvency resolution professional, where it was mentioned that the IRP can be appointed within 14 days. Now, the court clarified that the IRP will be appointed on the commencement, that is on the date of the approval by the NCLT. So on the date, NCLT admits the application. On that date itself, the insolvency professional, who is termed as IRP, Insolvency Resolution Professional, will be appointed. So there will not be any gap between the appointment of the insolvency professional and the commencement. So the commencement and appointment date of the insolvency professional will be same. Now Section 5, subsection 15. It expanded the definition of interim finance. Those who deal with IBC, they know the definition of interim finance means to run the company during the stress process, stress period. That is the insolvency period. Sometimes in the stress company, in most of the cases, finance is not there. The professional, insolvency professional who is appointed as a IRP or RP, he need money to run the company. Because in that case, the company which is called corporate debtor, the objective is to run it as a going concern. It cannot be run as a closed concern. It has to be run as a going concern. So the salary, the running cost, the electricity charges, the raw material charges is required to be paid. So interim finance, if any money is taken to finance those running costs, is treated as an interim cost, interim finance, and it has a priority. It is termed as a CRP cost and has a priority. In this interim finance, some other items were also included. We'll come to that. Now, section 7. Section 7 is for initiation of insolvency process, application by insolvency process by financial creditor. So there are three kinds of sections where the insolvency process can be, application can be filed, section 7, section 9, and section 10. Now, when we go forward, you will find that all of us know the insolvency process has been stopped for the time being. And the new section 10 capital A has been introduced. Now, section 10A is impacting section 7, section 9, and section 10, which are the sections for initiation of the process. So sections 10, 7, it is minimum threshold for certain classes of financial creditor. Now, threshold means how many creditors, when they come together, can come together, then only the petition can be filed. It is for real estate creditors, those who are real estate allottee, that is flat book, those who have booked the flat, number 1. Number 2, those who has given the FD, fixed deposit holder, those are there. And third is wherever their authorized representative is required to be appointed. So this kind of creditors are covered under section 21, subsection 6, capital A, small a and small b. So basically, to understand, those who have applied in real estate, they can file file petition for starting in insolvency under section 7 only if they are minimum 100 number, if it's a very large project, or 10% of the total number in that particular project. Here I would like to clarify. Let's say IBC Company Limited, there is 10 projects. So this will be applicable project wise. It will not be, when we count 10% of the total number of the allottee, we will not calculate the total allottee in 10 projects, but it is project wise, project A. In project A, suppose there are 1,000 allottee. So 10% of the 1,000 allottee is 100, 100 or 100, whichever is lower. But if there is only 10 allottee, suppose it is a project, there is only 10 allottee, then 100 will not work. The lower is 10% is 1. 1 allottee will be sufficient to file petition. So for real estate project or for fixed deposit holders, minimum 100 or 10% of the total number is required to file the petition. Next is section 11. Previously, there were some lacuna in the act. That suppose company A is in insolvency. Now, company A has some receivable in the form of debtors. Now, as per the act, the reading of the act, I am in insolvency. I cannot file CRP process against my debtors. What is this? My debtors are my asset. I cannot realize by way of CRP. Now that lacuna has been addressed. Now, even if company is under CRP, it can take its debtors into CRP. So section 11 has been amended. Section 14, which is very popular section, and probably those who practice in insolvency, they understand section 14. It is moratorium period. Moratorium we all understand. It's a cool period, that during this period, nobody can touch the corporate debtor. No action can be taken, no suit can be filed, no proceeding can be initiated. So this is section 14. So because of section 14 only, the major benefit which was there under SICA Act, DIFR, but there were unlimited moratorium. Here, the moratorium is still CIRP period is continuing, that is 6 months, or if it is extendable by 90 more days. So till the order for liquidation or resolution plan comes, the moratorium remains. Now, the scope of the moratorium under Section 14 has been expanded. Now, it has clarified that license, permit, registration, quota, concession, etc. cannot be terminated during the moratorium. Suppose my license is going to be terminated 2 months after my process is started. Now, the objective of the code is to keep the company as a going concern. If there is no quota, no raw material, how can I run my company as a going concern? So it has to be closed down. Then it will not fetch the right kind of value that is expected. That's why, dear friends, it was required. It was a very welcome change. Now, even if the date is going to be expired, the supply has to be kept continuing. The only condition is that whatever supply is made, whatever expenses are incurred during CIRP period, that will be treated as a priority cost, CRP cost, and need to be paid in priority. Likewise, further section 14 subsection 2A, that any supply of goods, etc., if it is there, it cannot be terminated, cannot be suspended during CRP period, and the cost has to be paid in priority. Now, section 16, again, it is consequential changes because we discussed about section 5, subsection 12, where we said that IRP will be treated as appointed from the date of commencement. So the consequential changes are there in section 16. Now, section 23, there was a lacuna. It was mentioned that IRP will continue till the CRP period. Now, the CRP period, once the COC approves the plan or COC rejects the plan, the petition will be filed with NCLT. Now, NCLT many times takes 2 months, 3 months, 5 months, 12 months. In SR Steel case, we saw it took more than 2 years. In one of my case, it took more than 11 months. No, more than 13 months. More than 13 months. So what will be the status of the IRP during that period? Section 23 clarified that between the expiry of CRP till the appointment of a liquidator in case of the liquidation, or if it is in liquidation, till the liquidator is appointed, so IRP or RP will continue. The company cannot remain without a head, because now with the changes in the Ministry of Corporate Affairs, the IRP or RP will be treated as CEO, Chief Executive Officer of the company, and the reform is required to be filed in the ministry. Now, another change is section 32 capital A. Dear friends, it's a very important change and very drastic changes has been there. Probably this is the most wanted change that was brought in and introduced by the government, because the government was watching the code. Probably you have seen that the kind of changes that has been made in the insolvency and bankruptcy code, there has been such kind of changes in very few other acts. In 3 years, there has been more than 5 times changes in the act. There has been more than 10 times changes in the regulation. There are many regulations, and in each and every regulation, there has been continuous change. What does it implies? Does it imply that our code was not properly drafted? Or does it say that? No, the government is very adaptive, and whenever there is requirement for change, they are immediately taking it up. My submission will be that code was drafted very nicely, but then, as we know, the world is changing very fast. The time is changing, and the government has been very adaptive to the demand. The government has been very responsive, because after this code, we know that there has been huge judicial pronouncement, and there were varying judicial decisions also. To address the judicial decisions, the judicial precedents, the government has to come out. I recollect, I had visited Ministry of Corporate Affairs to make a presentation on some of the issues where the IBBA chairman and Secretary of the Ministry of Corporate Affairs, Mr. NJT Srinivas was also there. It was sometime in March 2019. And then after my presentation was over, it was around 5 o'clock in the evening. I told the audience, I told the dignitaries that I would like to make one submission of my experience in the code that it is required to be changed. Then I requested Mr. NJT Srinivas, can I make the submission? He said, yes, Mr. Agarwal, please go ahead. I said, sir, most of the companies under insolvency and bankruptcy code are going for liquidation. Around 80% of the companies are going for liquidation. Hardly 20% are getting resolved. And my view is most of the companies are going for liquidation because the government dues are, most of the judicial decisions that has come up are treating them as a special, a priority dues. Whereas the code in section 31 very specifically mentioned that the government dues is also operational creditor. But then judiciary is not ready to accept this thing. Mr. NJT Srinivas then reiterated, no, how can it be? It is the operational creditor, and the government dues need to be treated like any other operational creditor. And section 53, that waterfall mechanism, also takes government dues in position 5. Then how can it be? I said, no, sir, since it is not being accepted, and that's the reason that most of the applicants, most of the people who are coming to resolve the company, they are scared. They don't know what will be the demand of the income tax, GST, in the days to come, and they don't want to face the uncertain situation. Thank God, in April 2019, there was a NCLAT judgment, maybe in Synergy Dure Private Limited, whereby the NCLAT confirmed that the government dues are operational creditors. They cannot have any priority. In the resolution plan itself, it has to be addressed. Likewise, we know the litigations going on in case of the Bhushan Power and Steel, which was taken over by JSW. We all know it was very prominent in the newspapers that once it was the plan was approved by COC for JSW in case of the Bhushan Power and Steel. Suddenly, they found that Enforcement Directorate under PMLA, they said that no, this plant has been, or this company, the asset has been acquired with the tainted money. That's why they will attach the asset of the company. Now, suddenly, JSW, who have nothing to do with the company, they are putting their 19,000 crore rupees in the company, and somebody coming and saying that no, it is a tainted money and we will take it away. Why should he invest money? And then, fortunately, they approach the government. They approach the judiciary also. Good sense prevailed. Government immediately came out with this new section 32 capital A to ring fence the corporate debtor. Does it mean that you do all wrong things and you will be left scot-free? No, my dear friends. What the section says, that the liability of the corporate debtor, which is a legal entity, which is a judicial entity, legal entity, it is any offense committed prior to the insolvency commencement date, it will cease, because the moment the insolvency commencement date has happened, it has freeze there, moratorium has come. It has come in the hand of the insolvency professional, and it will be handed over to the new applicant. So anything done prior to that, the ex-promoter will be, ex-management will be held responsible. So that means, no, the person who did the crime is not being left scot-free. They are not allowed to go scot-free. The action will be taken. The action will be taken against the ex-management, not against the current management, because the current management is a new person. He has come voluntarily to revive the company. He is, in fact, contributing. He should be rewarded because something which has gone distressed and somebody has come forward that fine, you give it to me, because it's a It's a national resource. I mean, this economic resource is national resource. It's not individual. Ultimately, it may be Tata's, Birla's, or Mr. Agarwal's, but this belongs to the country. From its employment is generated, the revenue is generated, the tax is generated. So, dear friends, so this 32 capital A has now given a big moral booster to the outside country investor also, that go, come, invest, and whatever you get, it will be totally non-tainted, and nobody can come and touch it. So you value it, and if you value it, and if you find it, you are getting at the valuation you made, you should be very happy, and ultimately the fund will come back to the government. Friends, I got some opportunity to train income tax officers. I got opportunity to train DRT officers. In income tax department also, the message that we were asked to convey, that see, your demand may be 100 crore. In the resolution plan, you may be getting 1 crore, you may be getting 5 crore. This demand 100 crore is whose money? It's the government of India money. Now, suppose if you are to be satisfied with 1 crore, you should be happy, not because that 90 crore is not coming, but you should be happy that you have got 1 crore. The company has become active again. Somebody new has come. The company will again run with full capacity. The employment has been revived, and the company will again be revived. And when the company, maybe in 3-4 years, then it will start processing full capacity. Probably the income tax department will get more than 100 crore rupees. Now, take an example of SR Steel. SR Steel, which has been sold, which has been revived at 50,000 crore rupees. Now the company is making money. The employment all has been set. Those who are the employee, maybe 10,000 employees or 5,000 employees are there. The government has started getting revenue from day one. So government has not lost anything. For the shorter term, we may see that there is a haircut of 50%, haircut of 10%, haircut of 90%. In some of the cases, you have heard that the haircut is as big as 95%. But then, synergy today, where the haircut was around 94%. But then IBC also came out with its version that the value has lost. Last 20 years, the company was closed. Now, if you talk about 90%, there is no point. It was terminally ill. Even at 6%, if somebody has taken, it is at current market value, number one, because the company has been revived at current market value. If you think my value is 100 rupees, whereas today it was 5 years back, but today your value is only 2 rupees. So you cannot say that the value has gone down. The value is already depreciated. So whatever value you command today, you will get that value only. The investor will not put in your old value. That we need to understand. In SR Steel, which was where it was not getting even at 30,000 crore, but then value, people look the value in it, and ultimately it could be resolved at 45 to 50,000 crore, my dear friends. Now, another amendment, threshold for default under Section 4 of the Insolvency Code by MC notification of 24th March increased to 1 crore. All of us know, dear friends, that if the default is 1 lakh or more, the application under Insolvency and Bankruptcy Code would have been filed. Now, probably the government was feeling so much of application was being filed that their infrastructure was not able to address that. And to address these issues, even the Insolvency Law Committee had given its report, which has suggested the limit to be increased to 50 lakhs and a special consideration for MSME. But suddenly, that time the COVID came, and government could visualize that during COVID, there will be much more default, and the infrastructure will totally broken if it is allowed to continue. The government on 24th March increased the limit to 1 crore rupees. Now the question came, what will happen to the petition, the application which has already been filed? Whether they will continue or they will it will be rejected. So that was a question for which nobody has answered. But yes, the discussion was going on that it's a substantive change. And if it is a substantive change, it cannot be retrospective. Moreover, in the amendment also, nothing of this sort was mentioned whether it is a retrospective. So if it is not mentioned, it should be presumed to be prospective. Thank God there has been 2 NCLT decision judgments in recent days, whereby it has been now made clear that it is retrospective. The application, where the application has already been filed, it will be taken up whether it is below 1 crore also. The 2 judgment that has come, NCLT Chennai bench in Aeroline Organic Products Private Limited versus Rockwell Industries. Another of Kolkata bench, Foseco India Limited versus Om Boseco Rail Products Limited. It was taken up and it was admitted, even though the default was less than 1 crore. So that issue has been now put to rest. But now no new application can be filed if the default is less than 1 crore. Friends, here there is a proviso in section 7. If it is a financial debt, then if you are a financial creditor and your loan is below your default is below 1 crore, there is a provision whereby if the total default of the company is more than 1 crore, by including 2 or 3 persons, then it can be filed. But if it is operational creditor, then individual creditors' default should be more than 1 crore or more, not less. So that's the law D. So in case of the financial creditor, if the default is even less than 1 crore for one person, but if the company's total default is more than 1 crore, the petition can still be filed and can be taken up. Now the interim finance, as I told, that the definition has been expanded and it has been included a debt raised from special window for affordable and middle income housing investment fund 1 for the stalled housing project. If the debt is raised for special window for affordable and middle income, it will be treated as interim finance for the purpose of insolvency and bankruptcy. Friends, the most debated changes is introduction of section 10 capital A, that is suspension of the insolvency code for the time being for 6 months, which can be extended to more than 1 year by way of the ordinance. So section 10A means the code, the act has been amended, has been changed. Now look at what the preamble says. The preamble, for any change in the act, there must be some preamble. The preamble is there. So the preamble says, it is difficult to find adequate number of applicants, the investor. Number 2, to prevent the industries from being pushed into insolvency, which is already in distress due to COVID. And 3rd, to exclude the default arising on account of COVID-19 situation. So this is the preamble. Keeping these things in mind, the new section 10 capital A has been introduced for suspension of the CRP initiation. Now, what is section 10 capital A? It says, notwithstanding anything contained in section 7, 9, and 10. As I said earlier, section 10, 7, 9, and 10, these are the 3 sections by which the insolvency process is started, the application is filed. It says no application can be filed for any default which had arisen on or after 25th March for a period of 6 months or such further period not exceeding 1 year. So what it says, section 10 capital A, it talks about default which has arisen on or after 25th March 2020. So what about the default which arose up to 24th March? So after 25th March, there is a stop. Section 10A is applicable. So before that, let us further proceed. Now, proviso says, provided that no application shall ever be filed for such default occurred during the period. So, proviso says that default occurred from 25th March 2020 till 6 months or 1 year. If any default has occurred between this period, for those default for the lifetime, no insolvency process can be started. Somebody will say, those who are in distress, they will try to make the default during this period only, so that the creditor cannot take them into insolvency for the lifelong period. It may be. Now, what the explanation says, for the removal of doubts, it is clarified that provision of section shall not apply to any default committed under the section before 25th March. Now, friends, if the default has occurred up to 24th March 2020, that means if the account has already been declared NPA by the bank before 24th March, up to 24th March, if any payment has become due before 24th March, whether you have sent the notice or not, whether you have filed the petition or not, you can still continue to file petition under insolvency and bankruptcy code. And if any default occurred between 25th March till next 6 months, lifetime, the petition cannot be filed against those default. So the COVID default, the default during COVID period are given immunity for the lifetime, but those default which has already occurred has no immunity, no moratorium. They can today also they can be filed if the registry NCLT is open. Friends, it's not that our government has come out with this relaxation under section 10 capital A. There are many other countries across the globe. They have kept on suspension the insolvency process. In UK, there has been a temporary ban. In Singapore, the threshold has been increased from 21 days to 6 months of default. In US, relief has been given to small businesses and individuals. In Australia, the relief has been given by increasing the threshold. In Belgium, moratorium is there that has been deferred. In Germany, again moratorium that is suspended. In Russia, there has been moratorium like that is suspended for 3 months or 6 months. So, this, as I said in the beginning, it has impacted across the globe. Across the globe has been impacted. So, across the globe, the government is thinking in the similar lines. Now, friends, coming on the issue, the default in the case of the corporate, it has been extended. Now, we know that the corporate guarantor, the personal guarantor to the corporates has been made also liable, and process can be started against them also insolvency process. We find that there is no immunity to them. So can insolvency process be started against the personal guarantor to the corporate debtor? My answer is yes. Because since there is no specific exemption or immunity, relief or relaxation, the borrower, the company, the lender can initiate insolvency process against the personal guarantors because their liability for the debt is co-extensive with that of the corporate debtors. So personal guarantors are under risk of insolvency. Now, this June amendment has also made inserted section 66 of section 3. Section 66 talks about the fraudulent trading. It talks about the avoidance of transaction whereby if there is any avoidance transactions, it comes within that. The RP is supposed to find out and file petition with the NCLT, executing authority, against the culprit, that is the promoter or management or the officer, whoever does it. Now there were two subsections, 1 and 2. Subsection 1 talked about the anything done with the intent to defraud. Defraud. That is, if I talk about 1, it is intentional defrauding. Subsection 2, it talked about due diligence. That means the promoter knew that the company may go into insolvency, but he did not take care. And there was a loss to the company. Then subsection 2 comes in. Now, there is distinction, clear distinction between 1 and 2. Now, by introduction of subsection 3, in section 66, subsection 2 has been deferred, has been given immunity for the lifetime. Not any wrong done under subsection 1, because subsection 1 is for intentional, that is the defrauding, and subsection 2 is due diligence. So what subsection 3 states? It says, notwithstanding anything contained in this section, no application shall be filed by a resolution professional under subsection 2. Under subsection 2, what it talks about? It talks about if any loss has occurred because of the due diligence of the promoters or the management in respect of such default against which initiation of corporate insolvency process has been suspended. So it is suspended. Say, where section 10A is applicable, that is from 25th March 2020, the process did not, the process was deferred, and during this period, if any transaction happened, where section 66 subsection 2 applies, then for lifetime, it has been exempted. But if it is an intentional defraud, subsection 1, then once the process starts, the RP can file the petition for subsection 1, but not subsection 3. That is what subsection 3 has been introduced. Friends, now as we know that J&K has got no special status. It is part of the normal procedure. That's why by this amendment, even in the insolvency and bankruptcy code, it is applicable to J&K. Now there has been some changes in the regulation. Now change in section regulation 40B, where the filing fee, which was last date was has been made up to, if there is delay after 1st October 2020, then only for filing form IP1, CRP1, CRP2, CRP6, the filing fee will be applicable, 500 rupees per month. Then regulation 40 capital C has been inserted. This is like the Supreme Court and NCLT, NCLAT, and everywhere it has been mentioned, High Court, that limitation will not be applicable during the COVID period. So 40 capital C says that this lockdown period will be excluded in calculation of 180 days or 270 days or 330 days or whatever timeline required. This period from 25th of March will be excluded. If you look at, it talks about this lockdown imposed by central government. So the question will arise, different state governments are giving their own timelines, whether that, what will happen to that? Because if you are in Kolkata and West Bengal government has extended the lockdown to July and I am not able to do my work, how can I do? How can I justify? Probably if you look at the NCLT, NCLAT, etc., you will find that they have included state government exclusion also, and I'm sure those who face this kind of difficulty and they approach the NCLT, they will get the appropriate relief. The similar kind of relaxation has given for the liquidation process also. Now changes amendment made by the Ministry of Corporate Affairs. which was a very long demanded changes and clarification which was required. Earlier, the RP were supposed to be in control of the company, but then if there is a managing director or executive director, they will remain there. If it is a simple director, even though promoter director, his power is suspended, but the managing director and whole-time directors are there. So the RP, we are finding it difficult. Now with this changes of 6th March 2020, MCA has clarified that IRP or RP will be treated as CEO of the company, Chief Executive Officer of the company, and he is compulsorily required to file the Form INC 28 in the MCA. Even AOC 4 and GT 7 shall be filed through E-Form GNL 2, and there is no requirement of filing 2 director signature, only signature of the RP as a CEO will be sufficient. Any approval of the plan or new board when it joins, the RP will only through INC 28 will incorporate that. So much required clarification and process has been clarified by the Ministry of Corporate Affairs. Now, if you look at NCLT, dear friends, we know that from 19th March, NCLT stopped accepting hard copy of the documents. Nowadays, if there is an urgent hearing, and that also has been clarified what are the urgent, soft copy through email can be filed, and video conferencing, the hearings are held. In NCLT, NCLT both. NCLT, some work started, even normal hearing started, but again, by recent circular till 3rd of July, all the work has stopped probably due to spread of COVID in Delhi, which is surpassed many numbers. So on and off it is coming and going down. Most of the benches of the NCLT are only taking up urgent matter, but some of the benches of the NCLT are also taking the normal petitions. In Kolkata, only urgent petitions are being taken. We don't know what will happen, but it's sure that the number of petitions are increasing day by day, and the government, the judiciary has to come up with solution, because lockdown is not the solution. So maybe video conferencing through video mode, the hearing need to be started at all the developments. In Supreme Court in 23rd March itself, the Supreme Court notified suo motu that till further orders to be passed by this court, all the limitation will increase. That is, the period of the lockdown will be excluded. So that's applicable to all the judicial forms. Dear friends, for IRP or RP during this lockdown, many IRP were wondering how they will be working during the lockdown, because everything has come to stand still. Then there was a letter from IBBA that it is the turbulence time which makes the sailor perfect. During turbulence in the river or the sea, the sailor know how to handle and becomes perfect. So the COVID-19 is presenting trying times for the humanity. The role of RP has no less than caregiver. So like we say that doctors are the caregiver, they are the frontline warrior. The military is frontline warrior in the border, the doctors are in the COVID. Likewise, the IRP and RP has been termed as warrior for the stress company when the insolvency is going on. If they say that no, we can't do anything, no, it cannot be treated, taken in a kind manner. They have to fight it, and they have to see that there is no damage to the value of the corporate data. You know that IBC is the last resort, and we can and we are meeting the COC meeting, and all our works is being controlled through virtual platform, dear friends. Friends, you know that all of us know that under GST Act, unless and until you pay the previous amount due, you pay the previous return, no new return can be filed. When I take over a company under distress, definitely there will be due of the previous time. Definitely there will be dues of the returns of the previous period. And under the Insolvency and Bankruptcy Code, from till previous period amount you cannot pay. You cannot pay, even your money you cannot pay, because there is a moratorium, and it is treated, even the government is treated as the operational creditors. So if there is any outstanding GST, the GST department has to file the claim form in Form B. So the problem was, once I took over, the company is a going concern. The RP wants to pay the GST and want to file the return, but he was not able to file. So they approached the NCLT. There were many NCLT decisions that no, the government need to accept the current payment and current returns. But the commissioners, the officers were finding it difficult to accept it because the system was not tuned. Now the government come out with a notification on 21st March, which clarified the position, and it also clarified the moment RP takes over, they need to enter into the system that they have taken over, and they will be the person, registered person. They will be the authorized person for the for GST purpose. So after that, the life has become easier, and the RP need to file the return, whether it is a nil return or it is with taxable return, and also make the payment for the CRP period that is there. Friends, this bylaw changes in the bylaws, I will not discuss. It is regarding the payment of fee by the IP to the Insolvency and Bankruptcy Board, to the IPA, Insolvency Professional Agency. The last date is 30th June. That is, today is 28th June. Those who have not paid the fee, their insolvency IP fee to IBBI or IPA, they should pay within next 2 days. Otherwise, interest may be applicable in those cases. So that is the changes that has been brought in. Friends, SEBI has also relaxed the under listing and listing guidelines. For listed company, the return, quarterly return, and the annual return that could have been annual accounts could have been signed by 30th June. Now the date has further been extended by 1 month, and it is up to 31st July 2020. Probably this was required because you know that there has been many difficulties. The issue of chartered accountant has come up with many guidance note also that during COVID period, how you can verify the physical verification of the inventory, and valuation may have gone down. How you will address those cases also. Friends, two Supreme Court judgment, which I initially said that I'll discuss with you. I find that it is already time is not in our hand. It is becoming 7 o'clock. Very quickly, I'll cover those two cases. Limitation, Insolvency and Bankruptcy Code. The limitation period is 3 years from date of default. So, what is date of default? From that date, even if you have gone to Supreme High Court or SARFAESI or DRT under any act, that will not be treated as continuation of the this period, but the original date of default will be taken, and from that date, if 3 years has elapsed, you cannot file your application under IBC code. If any claim is filed with IRP or RP, there also law of limitation is required. If the payment is due for more than 3 years and there is no acknowledgement, that is annual acknowledgement, like if a loan has been given and you take a acknowledgement every year, a confirmation, what we call confirmation, it is an acknowledgement. Then the period starts from date of acknowledgement. But suppose if there is the debtors has given it in his financial statement, whether that will be treated as acknowledgement. Dear friends, till now, yes, we were used to say that if it is appearing in the financial statement of the debtor, it will be taken as a acknowledgement of debt. But recently, through a judgment of MCLAT, majority judgment was that no, it will not be taken as judgment. I'm sure that it must have been gone to Supreme Court And finally, what is the decision of the Supreme Court that we need to look at. Now, mortgage on behalf of third party, as I discussed, in case of JP Associates Limited, the company has given mortgage property to the lenders for the holding company, and those debtors filed the claim for the JP Associate Limited, where they were not treated as a financial creditor because the loan did not come directly to the company; it went to the associate company. Supreme Court judgment was there since the company did not get any benefit, so they will not be treated as a financial creditor. They may be treated as a secured creditor, but not as a financial creditor. And if they are not financial creditor, they cannot become part of the committee of. They cannot become part of the committee of creditors because it's third party. Okay. So, friends, this is the short presentation I had. If there is any question, any query, it will be my pleasure and my privilege to respond to that. The queries can be from anything and any section of the insolvency and bankruptcy code. Thank you very much.
Thank you, sir. Hello.
Yeah.
Thank you, sir. CA Arun Kumar, sir. Hello.
हाँ जी
हाँ सर, मैं रिक्वेस्ट करूंगा सर, रिस्पेक्टेड सी सुबोध कुमार अग्रवाल जी का जो वंडरफुल प्रेजेंटेशन हमारे श्री फोर्ट सीपी स्टडी सर्कल में हुआ है सर, उनका धन्यवाद अपने तहे दिल से किया जाए सर, प्लीज सर.
Respected Subodh sir, in such a small time, within 1 hour, sir, you have covered all the recent changes in very crisp and clarity. Actually, I am very much updated now all the changes taking place, starting from, sir, you pointed out changes made in taxation, GST income tax deadlines were changed, SEBI listing obligation disclosure requirement. Initially, they changed to 31st May to June, then 2-3 days back, they have changed 31st July. It will ease all CA fraternity and businessmen to that extent because a lot of compliances are to be informed by June, which was a very Herculean task. Rather, it was not feasible to report correctly, sir. In addition to that, sir, the initiation proceeding under section 7, 9, 10, and the recent changes with, I think, on 5th June, 10 capital A suspension of insolvency, the problems which come up after 25th March for 6 months initially, that let us see what happens thereafter. And you very correctly said whatever happened before 25th March, definitely there should be fear and course of action should be there. In addition to that, sir, insertion of section 32A for betterment and threshold fixing defaults enhancement due to COVID, new applications, sir, and 66.3, what you have said, it's a lot of clarity there, sir, and definitely if any one of us read now, it will be very easy for us to get a better and clear idea. That was needed in the time, sir. So nice of you for the clear and conceptually clarity on this issue, sir. So much. Thank you so much, sir. So nice.
Thank you very much. Thanks everybody.
थैंक यू सर. मैं आपका तहे दिल से सर, मैंने छोटी सी रिक्वेस्ट करी तो आपने मेरी रिक्वेस्ट को माना सर, इसके लिए मैं भी धन्यवाद करूंगा सर आपका सर. नाउ आई फॉर्मल वोट ऑफ थैंक्स के लिए सीए अमरनाथ जी, एक्स डिप्टी कन्वीनर श्री फोर्ट सीपी स्टडी सर्कल को रिक्वेस्ट करूंगा.
Sir, thank you very much, Dharam Singh ji. And good evening, Subodh sir. Good evening, Arun Kumar sir. On behalf of City Fort CP Study Circle, I would like to thank all the speakers, Subodh sir, and all our other 2 speakers who have already left the scene, and all the members who have joined us. It is a really a pleasure, sir, to have you people on this platform, and all who have joined. We will continue our effort. Arun sir has already spoken a lot about Study Circle also. We will continue to do program, and we'll expect sir, you sir also in help in our future endeavors in this regard. I once again thank to all the members of CA fraternity who have joined our study circle, and request all of you to give your support to us so that we can be successful in our endeavor to promote and educate all the our CA fraternity. Thanks a lot, sir. Over to you, Dharam Singh sir.
Thank you, sir. Thank you, respected.
Everybody.
Thank you, sir.
Thanks.
Thank you, sir.